All right. Hello, everybody. Welcome back to another episode of the Market Close. We are live. What a day it has been. What a day, what a week. It has been quite the journey navigating the equity markets this week. And we are ending green. At least that's what it looks like. Now, it's not as green as we were at the height of it today, 672 on the S&P 500. Quite frankly, we are very close to going red for the day, which as I said in the morning, it's not the worst thing in the world to end red as long as the red is not as bad as it was in the pre-markets. 672 on the S&P 500. We could, theoretically get to like 668, 69, and still that would be better than the 663 level that we had this morning. Tesla, green. It was at 382 in the morning. Right now it's green. Robin got to 114. It's at 123. NVIDIA was at 191. Now it's at 189. You're getting a little bit of a sell-off as we get into the close. A couple different headlines that could be affecting it that we'll talk about in a second. AMD could not go green. Nebula is still down 5%. CoreWeave it did go green for a bit, capped to 80, now back at 77. That's down. Netflix down because of some concerns of them buying Warner Brothers Discovery. Palantir going green at 174. At one point, Palantir got to 176. I mean, basically, you're seeing a lot of these assets either end green or end slightly green or end slightly red, which is not the worst thing in the world. S&P just going red right there, but still above 670. BM&R wrecked today, down 6.3%. Why? Ethereum right there, 3,100. That's down 1%. Bitcoin as well did get back to 97, right back to 94 over the past 30 minutes. So crypto assets really have not been cooperating in a meaningful way. We didn't get a big whipsaw to the downside throughout the day, even if we are kind of going red towards the close. But we didn't get a massive whipsaw back to like all-time highs. The recovery from the pre-market lows, I think, was the move higher that kind of stabilized a lot of portfolios for the day and potentially got rid of a lot of margin calls and stop losses, etc. But nonetheless, still an ugly day and ugly week across the board for most people. Robin right there, 123. Rock Lab at 45.27. We got a lot of macro stuff to get into, a lot of different headlines to talk about. We'll be having a startup join the show at 4:30. And we'll get to hear from some of the new products that are out there in the crypto financial ecosystem. First off, we got Tom Lee. Let's hear what he has to say, and then we will keep going from there.
Also the chairman of BitMine. So it's good to have you. Ether's down 8.5% this week. Bitcoin's down 8. BitMine is down 20. What's happening here?
Scott, I think we're still seeing the repercussions of that April 10th crypto deleveraging event. It was the biggest deleveraging event ever. And there are still, I think, some market makers that have some balance sheet issues that are trying to raise capital. So I think that this is leading to a market that is kind of raised. Every time we get a bit of a rally, there's some capital trying to be raised. And I think that's what's suppressing crypto for now. That's, of course, going to end soon. But I think that's led to why crypto has underperformed equities since October 10th.
Can crypto treasuries like yours, for example, can they trade as well or in tandem with a cryptocurrency itself, or does one have to trade at the expense of the other? If I'm going to see money flow into Bitcoin or crypto treasuries, wouldn't it then come out of the actual pure play coin itself?
Not exactly, Scott. For instance, when BitMine has shareholders and institutional capital comes in, and JP Morgan, Invesco, BlackRock are buying big stakes, then that capital is then used to buy Ethereum. So it's actually going back into the ecosystem, but then it's going into a vehicle like BitMine that's actually a permanent holder. BitMine owns 3.5 million Ethereum, more than 2.9% of the supply, but now that is not going to be subject to liquidations because there's no leverage used to hold that Ethereum. And then at some point, that 3.6 million or 3.5 million Ethereum is going to be staked and then generate nearly $400 million in net income. Well, that can create returns for shareholders. So in a way, a crypto treasury is actually a pretty attractive equity because there's an income component, plus there's, of course, that ability to grow your Ethereum holdings per share.
But what if crypto treasuries become more favored than crypto itself? There's no negative impact for either the way that Ether or Bitcoin would trade if just more money floods towards the treasury part of this story?
Well, one, it's a conduit because, as you know, equity managers, many of them, the 4,000, can't own crypto directly, so they have to get exposure to Ethereum by buying a stock like Bitmine, and Bitmine is the 438th largest stock in America today. It's not that different than if someone wanted to have exposure to energy, they can buy oil and trade a commodity, or they can take like oil barrels at home, or they can buy an oil related stock, either a major or something in the supply chain. That's what crypto treasuries are, is essentially an asset class that gives you direct exposure to the crypto asset.
All right, let's pivot to the market itself. Is your confidence at all shaken in where we are and what you thought the prospects for an end-of-year run could be after what we've seen this week?
Well, it's never fun to see markets wobble and then stocks that are quite popular like AI and the quantums and nuclear come down so hard. But it is consistent with the idea that, we were up 6 months through October, so the market's overbought. We expected 2 weeks of consolidation, which is what we're getting. And then, of course, as you know, there's hawkish Fed talk, so there's a bit of a tantrum the market's having. But between now and year end, we still have really good seasonals. The earnings have been good. Sentiment has flipped negative, Scott, as you could tell. I mean, the AAI went to negative 17.5. So I'd say the risk reward is still really good for equities into year end. And yeah, I think the S&P will be over 7,000 by the end of the year. In fact, maybe over 7,000 by the end of the month.
No cut in December. Let's just say that's now the base case. And AI remains volatile. The broadening trade looked pretty good at times this week, to where we were thinking of, okay, maybe we're going to get an everything rally. You think that's possible?
Yeah. I mean, I think one reason the Fed is backpedaling on a cut in December is not because they have more confidence that inflation is strengthening. In fact, many of them said they just don't know, but in general, they agree it's probably not. I think that there are signs that the labor market is maybe stabilizing. So you actually have a Fed waffling for the right reason, which is, look, if the employment market's holding up, the Fed doesn't have to cut. That's still a good environment for equities. I'm not trying to spin it, but it's not a bad reason if the Fed is starting to have second thoughts.
Okay.
Always.
So I got to leave it there. I appreciate you. I've got some news that I have to get to, though. I'll see you soon. That's Tom Lee. We are now getting.
The thing on a day like this is, honestly, there's just not much that he can say that's going to alleviate the concerns that people have. I mean, look, BMNR stock has basically been dead over the past couple of weeks. Really, literally, I don't think he can say anything unless Ethereum makes a move. So you can go into the technicals of a digital asset treasury and explain all the nuances. No one cares on a day like this. And then when you say 7,000 end of month, I mean, again, if it happens, I think we'd all be happy. But obviously, it's a little tough to believe. And the reason it's tough to believe is because, unfortunately, this December rate cut is looking like it's just not going to happen. If you look at the new Fed probabilities for a December rate cut, we are now under 50% as Bitcoin goes down. We were at least at 51 in the morning. We're at 45. Based on what I've been hearing, and we'll discuss some of the headlines, you just got a lot of Fed presidents that are coming out. Even Fed Logan today said for December meeting, it would be hard to support another rate cut. I mean, at this point, it's almost like the Fed presidents kind of came together and decided they would unilaterally start pivoting from their stance on the labor market versus inflation. There are legitimate concerns about inflation. Not saying that there's not, but it's almost a full 180 from what we heard a couple weeks ago. And I think that's going to piss off a lot of people. One of those is the president, who really needs this affordable economy, and rates going lower would help to make it affordable. But I don't know, gun to my head, I would say it's tough to imagine we're going to get that rate cut just based on how the Fed's speaking. You got to have a little bit more unanimous consent. And right now you're not seeing that. Tesla right there, 404. Robinhood holding 122.60. NVIDIA still holding 190. Palantir is green on the day, and the S&P slightly selling off. Palantir right there, 173.93. And, that is why I think that next week is going to be really interesting. Obviously, we've got NVIDIA earnings. NVIDIA got a bunch of different upgrades today, and we talked about some of those in the morning. All those upgrades, Bank of America 275, Morgan Stanley 220, all of those upgrades are rooted in just reasonable earnings estimates if you go out a year or two to try to understand what the multiple should look like. Fear and greed, by the way, at 23. The problem is, even if NVIDIA puts up good estimates, and that's why Tom at the end, he said, I'm not trying to spin it, but at its core, he was trying to spin it, right? And in the spin is that even if the Fed doesn't cut rates, it's okay. And the way you make the spin is by saying, well, if the Fed's not cutting because the labor market is healthy, then the earnings are good enough, which means we don't technically need to cut. The problem is, I don't think anyone believes the labor market is healthy. And so if the labor market's not healthy and the Fed's not cutting, earnings will go down and you're not going to get any monetary easing support by the Fed. So it's like a double whammy that could really, really mess up the end of year going into Q4. Now, we don't know how that's going to play out. And maybe Tom Lee is right that the labor market is strong enough and the Fed is more worried about inflation. Therefore, earnings will be fine because the labor market will sustain itself and they don't technically need to cut. But it's hard to imagine 7,000 on the S&P not pricing in another rate cut. I mean, it's really hard to believe we go to 7,000, as he said, and you don't get a cut. Like, I would imagine you think you would need to get a cut. And so for everyone saying, well, it's so obvious that the labor market is down, why isn't the Fed recognizing that? I don't know. I have no idea this week how they came to the conclusion that inflation matters way more than everything else. But that is the Fed speak we're getting, and the Fed future probabilities are now heavily discounting the ability for a December rate cut. Labor market is fine as long as we don't get jobs data. Yeah, exactly. Exactly. It's amazing we don't get the data. I don't know. We're going to have to see what we get going into next week. The one thing I can say is at least we are getting a rebound as we get into the close 671. We talked a lot about in the morning is the structural fundamentals of this bull market incomplete in regards to the AI trade? The answer is no. We do have some updates on AI in regards to Alibaba and Oracle that we'll talk about in a second. But that I don't think that's the reason we sold off. I think the reason we sold off over the past couple of days, and we are relatively where we were a couple of weeks ago, but the reason I think we sold off is because of this lack of certainty around a rate cut. So I don't think it has anything to do with the AI trade. Maybe I'm wrong, but I think it really does have to do with we don't know if we're getting a rate cut. And if we don't know, then the market will be scared. Bitcoin right there, 94. Nasty candle as we get into the close. We were holding 96 for the better part of an hour. Ethereum has somehow stayed above 3,000. I mean, you would imagine today with all the liquidations and leverage that Ethereum would have kind of chopped below around that 28, 29 level, but it did not. 31.32 right there on Ethereum. And that is what we got. All right, folks, been an ugly week, ugly day. It could have been a much uglier day, so you got to have a bit of gratitude here. Pre-markets were way worse than what we are ending on. Basically, we're going to be ending flat on the day, which I think anyone would take at 671. But nonetheless, we are closing out the second week of November. Thank you, everybody, for being here. Friday, November 14th. The stock market is now closed. All right, we end out the day flat on the S&P, 671.96. 671.96. Tesla, 404. Tesla was at 382, so a $400 close. Not the worst thing in the world. Robinhood got to 110 in the morning, 122.50. NVIDIA, 190.17. That's up 1.77%. Nebius right there, 83.54. This one did bounce off the low 80s, but did not get into that 90 level. It tried to at 89, but then got hit again. CoreWeave right there at 77.36. MP Materials 58.61. That's up 1.862%. HIMS 37.02, up 2.69. Micron up 4%. Bitcoin 94.4. Ethereum 3,100. Rocket Lab right there 45.54. Rocket Lab did try to get around to that 48, 49 level. Got rejected around there, so 45.50. It did get to the 41s in the pre-market. NVIDIA gets a 190 close. I think that's more of the market being excited about NVIDIA earnings that are coming up. And there's a lot to be excited about for NVIDIA earnings because it's one of the best companies in the world. It's just a question of can it trade, in that $5 trillion market cap range like it did a couple of weeks ago, even with the macro being off tilt. Oklo closed the day below 100. Quantum, D-Wave actually ends up green on the day. These stocks were all down 10% in the pre-market. IONQ up 4% on the day. Rigetti right here up 1.1% on the day. BMNR down about 5.8%. You got Bitcoin 94,000, then Palantir right here 174. Green on the day. All right, let's get into some of these headlines because we have a bunch of different things that are breaking in terms of news. First of all, let's just look at the Alibaba headline that we had today, because this was a pretty weird one, but it definitely took Alibaba stock down a couple percentage points. So let me pull this up real quick, and then we will keep going from there.
Here's what the company is saying. They say the assertions and innuendos in the article are completely false. We question the motivation behind the anonymous leak, which the FT admits that they cannot verify. This malicious PR operation clearly came from a rogue voice looking to undermine President Trump's recent trade deal with China. That's a statement attributable to an Alibaba Group spokesperson. So, Scott, an aggressive response here from the company to that report from the FT, which, as you mentioned,
now, again, what did the FT say? Official White House memo claims Alibaba supplying Chinese military with tech to target the United States. Alibaba provides tech support for Chinese military operations against targets in the U.S., according to intelligence cited in a White House national security memo, raising concerns about the technology giant. Obviously, Baba was saying that's false today. The official memo provided to the Financial Times includes declassified top secret intelligence on how the Chinese group supplies the People's Liberation Army with capabilities that the White House believes would threaten U.S. security. When I saw this headline, quite frankly, I was like, okay. I was like, the idea that the tech companies in China are not supplying the Chinese military with the capabilities to target the U.S., I kind of didn't think it was that much of a story, to be honest. It's like, of course they are. Like, there was really no doubt that I think people thought that was going to happen. But Baba did fall 3.5% and about 2.3% as soon as that news came out. The bigger implication from this, realistically, is on NVIDIA. And the reason it's on NVIDIA is because, look, Jensen has this dream of, getting that $50 to $70 billion TAM from China if the White House lets him sell into China. I mean, if the White House memo is claiming that Baba's helping Chinese military targets, there's no way that I think Trump's going to be like, oh, yeah, NVIDIA, sell your chips to Baba. That's just going to use those chips, the best version of those chips, to then target the United States. So I think it's very, very unlikely that we are going to get NVIDIA revenue coming back to China. It seems like all the street analysts kind of don't care about that. And Jensen is stating so much domestic demand that it doesn't really matter. But, more and more of these stories makes it unlikely that we're going to get that Chinese demand. We do have some 13Fs. Druckenmiller, here's what he did. New positions in Amazon, Meta, and Chipotle. Amazon, Meta, and Chipotle. New positions is what Druckenmiller added. Top 5 buys were Amazon, Meta, StubHub, and Figure, the banking company around Bitcoin. And then top 5 sales included Eli Lilly and Microsoft. New positions, again, Amazon and Meta. He exited Goldman Sachs and Microsoft. Exited Goldman Sachs and Microsoft. I don't see NVIDIA's 13F yet, guys. Let me see if I can pull it up if it is disclosed. There's a couple that still haven't been disclosed, including altimeters. It should be coming out like now. So it should be coming out any second. Then we'll see what NVIDIA has in terms of their stakes. But this is what we have from Stanley Druckenmiller. Then after Stanley, you have our boy Chase Coleman from Tiger Global. He did not sell any of his grab. He has 92 million shares, did not touch those positions. He did add Netflix, MongoDB, CrowdStrike, Eli Lilly, and Novo. So he did add those new positions. Again, Tiger Global, Chase Coleman managing about $32 billion, as we can see right here. He added 3% to Amazon, reduced Meta by 62%, reduced Reddit by 24%, added to Broadcom, added to Flutter, added to GE Veranova. He bought Netflix, 201,000 shares, bought MongoDB, 340,000 shares, sold 72% of Sherwin-Williams, sold 22% of Zillow, bought Bullish. Kathy likes that one as well. Bought Figure, another person that likes Figure, along with Stanley Druckenmiller. Bought Klarna, 175,000 shares. He bought Figma, 60,000 shares. And those were some of the main buys that he had on his portfolio. He kept all of his Webull. He has 11 million shares of Webull, and he has 11 million shares of Nubank. Did not trim any of those positions. UNH, is he in UNH? Yeah, he kept his UNH, 438,000 shares for UNH as well. So that's what you have from some of these 13Fs, and NVIDIA should be coming out soon. Also, Altimeter's 13F should be coming out soon. And we'll be able to see what they did. Yeah, still not out yet for altimeter. Still not out yet for altimeter. Pounds are right there, 174. S&P 500, 671.91. And that one still flat after hours. Okay, Oracle. So what was the big news on Oracle? We need to see Triple V's 13F. You know, he's taking stakes sometimes where he actually had to legit disclose with the SEC. So he's definitely had those moments. Oracle. Okay, so what's going on with Oracle? Oracle's debt is having some issue. We talked about this, and this is another reason probably we had a bit of a sell-off into the close. By the way, Google investing $40 billion in data centers in Texas. That headline just came out right now. Is Google moving after hours on this? Goog's up 2%. Is this the reason? There's got to be something else. There's got to be something else. 40 billion in data centers can't be up 2%. Also, that news came out right before the close, so I doubt that's the reason why we're pumping. Let's see. Did maybe someone took a stake in Google that's highly influential? Is it really the 40 billion? Could that really be the reason? Could that really be the reason why it's pumping 40 billion for? I mean, that's them spending money. First of all, super bullish for the AI trade because Google is spending 40 billion. But why would the stock go up 2% on them spending money? In fact, if they have to issue some debt to spend that money, which we don't know, but if they did, you would get the opposite reaction. Yeah, I have no idea. I have no idea why Google's there. Did Berkshire buy Google or something? That is weird to see Google spike on that. Still holding the spike too. Still holding 2%. IREN after hours is up a little bit. Nebius after hours up. I mean, all the data center plays up a little bit on the headline that they're spending more in data centers. They're probably going to outsource some of that 40 billion to these other players. Druckenmiller didn't buy Google, not from what I see. If Berkshire brought Google, that would be pretty wild. Gemini, but Gemini 3 is a bit older news. I don't know if that's enough to pump it after hours on a Friday. Is it Berkshire? Hold on, I'm trying to confirm if it's Berkshire. This could also be fake. You could have a lot of people saying fake stuff. I see one screenshot. Do not know if that's accurate. I mean, it looks accurate, but I could be dead wrong. Hold on. Is it? Did Buffett buy Berkshire? Hold on. I have to confirm for myself. Okay, hold on. I got the holdings. Let me see. Added. I've got to see. If he did, then that's a fundamentally different shift. New positions, Buffett. He added Google. He added 17 million shares of Google. Oh my goodness. Buffett's in. Berkshire is in 17 million shares of Google. Holy crap. Is Berkshire embracing technology now? Whoa. You would think Google would be up a lot more. Dude, if this wasn't a crappy week, Google would be up like 7% right now. Like, this is Berkshire freaking Hathaway. The implications, even if Buffett's not running it anymore, of the brand of Berkshire taking a stake in your company. This was Q3, right? So their average price, I mean, we don't know yet, but it's probably below 200. It has to be below 200. Google was trading between 150 and 180 that whole time. It has to be. Damn, that means they're already up on it. They're already up in a sizable way. Wow. I don't know if this was Greg Abel, if this was Buffett, but Berkshire buys 17.8 million shares. 4 billion. That is correct. 4 billion. Oh my goodness. And this is after hours, so obviously on the market open on Monday, you might get a different reaction from Google. Dude, again, these guys fill out arenas for their shareholder meetings. Like, People are disciples of the Berkshire philosophy. When they take a trade, when they do something, I mean, there's hundreds of thousands, if not millions of people globally that follow every single thing that Berkshire does, and they take them very seriously when they initiate a position. The type of validation that Google just got, I mean, Sundar's got to be pretty happy right now. And by the way, you know they're going to hold it for a long time. I mean, I don't think they're putting in $4 billion just for the hell of it. You would imagine they're going to hold this bad boy for a long time. 1.729%. Don't believe the 243 average cost. You're not going to get the most accurate predictions from any of these websites. The quarter ended September 30th. Was Google above 243 before September 30th? Or even above 200? I think it was. But I doubt they bought all at once. September 30th. Yeah, okay, so Google got to 250 by September 18th. So they could have bought between July and September. I mean, unless they bought literally at the end of September, then they probably have an average closer to like 190 to 200. But we'll find out over time. The market value next, yeah, but the market value is just based on the current price. It's not based on the average that they have. And also these websites, they never have to disclose the average. So these websites, you can't trust them. I've tried calculating the average from these websites before. They don't have that. They have the position and they have the number of shares. But they can't actually give you the exact price. When Berkshire's 8K comes out and all that stuff, then you get a much better understanding of like the actual price they paid. 280 on the Goog, 17.8 million shares on Mr. Google. All right, Berkshire's in. Let me see if there's anything else coming out. Oh, Carl Icahn. Oh, here's the full thing from Buffett. Here's the full thing from Buffett. 17.8 million shares is what you have on the Googs. They added 15% to Chubb. They added 4% to Sirius. I still don't know why they have Sirius XM, but they keep adding to that. They sold 6% of Bank of America, sold 14% of Apple. Domino's 13%. They added 2% to Lamar Advertising and then 0.03% to Lennar. That's a home builder. Goodness, bro. 18 million shares of Google. I don't know what the new leadership's philosophy is going to be over the next 10 years, but Greg Abel, how old is Greg Abel? Greg Abel age. He is 63. I mean, Buffett's 95? If Greg's going to do this for the next 25 years, I mean, do you think he's buying $5 billion of Google to sell it tomorrow? I mean, they're probably thinking that there's something they've got to seriously commit to here over the long term. UNH, Buffett did not sell or buy 5 million shares of UNH. 5 million shares of UNH. They did not sell or buy. They kept it. Amazon, they kept it as well. Amazon was a while ago. I am going to be very interested to hear how they justify buying Google. I mean, they're going to have to speak to the implications of technology and probably AI. I would imagine they're going to have to talk about why AI matters for the economy and why Google is their bet to play it. Wow. Congrats to everyone who's heavy in Google this year. You got some deep, deep validation right now by one of the greatest investment firms of all time saying that they are taking a stake in Google. I mean, the stock would be up a lot more if I think the macro wasn't as wonky right now. Also, I mean, Buffett's been holding on to a lot of cash. So you're telling me the first time where they decide to deploy their $350 billion of cash is a tech company, and that's bearish? Like, they don't buy tech companies. They're sitting on more treasuries than the entire Federal Reserve. They say, hey, we want to take a $5 billion stake, and they pick a tech company. They don't pick Kraft Heinz. They don't pick a bank. They pick a tech company. Doesn't feel bearish for tech. And you can't even say Google's expensive. Like, you really can't. So it's quite incredible that they're taking this position, and it is validating a lot. I mean, if Buffett is saying, or Berkshire is saying, we like Google, that means they like AI. They like the multiple that a company like Google is getting on AI, which means why should the market be doubting the entire nature of AI? You could be doubting individual names in it, but doubting the entire concept is a bit weird. Now, here was the headline I was going to talk about before the Google news. Oracle credit risk is getting repriced. 5-year credit default swap spreads. We looked at the chart yesterday on Oracle. It jumped 13.5 basis points to about 102 bips. The biggest move since 2021 as investors hedged tens of billions in AI-related debt for data centers. Morgan Stanley is now seeing the net debt for data center build out by fiscal year 2028 to 290 billion versus 100 billion. 290 billion would still be small relative to the many trillions that have been pledged to be invested in data centers, but it is higher, which is why you've got people purchasing these credit default swaps to hedge against that debt going the wrong way. So that's what you got on Oracle. And again, I think that's why it was creating a lot of just like fear for the broader equity markets towards the end of the day as those credit default swaps started spiking around AI and data centers. But that's what you got there for Oracle. Qubit had earnings today, QUBT. I don't fully see their numbers. I think the stock is up. The stock is up 7%. This is quantum computing, $2 billion company. I think they beat on revenue. I'll get the exact numbers, but those guys are up. In about 10 minutes, we're going to have a startup join. I told you guys we were supposed to do this interview a couple of days ago, but we weren't able to do it. But this is a new startup, just raised 15 million from Benchmark in the crypto finance space, kind of taking on Coinbase and Robinhood and all those guys. So I did make an investment in them. This is the friend that I had from high school. They're going to be on the show. We'll talk a little bit more about their new product. I don't know if Steve's going to be able to make it today. He was really busy with meetings during the day. I'm going to give him a call after this and see if he can hop on. But if he can't, then he will definitely be live tonight. Dude, he stayed up till like 1:30 last night on his stream. I stayed up with him till 12, and then at 12, I had to call it quits. And he stayed on for like another hour and a half, which is kind of crazy, but yeah, he might be a little tired. Iran right there up 2% after hours. All the data center plays getting some love. Nebius is up as well. Is this bullish for Monday? I don't see it being bearish. I don't see it being bearish. Amit, did we ever find out Berkshire's mystery stock purchase? Is it just Google? Is the mystery stock purchase like? No. That was a couple months ago, right? Wasn't that another insurance play? Chubb was the original one. Did we find that, guys? Do you guys remember? Did we find that? Oh, it was UNH. Oh, what am I talking about? It was UNH. Sorry. Yeah, it was UNH. Oh yeah. Yo, Tanner, your boy bought the Googs. Your boy bought the Googs. Yeah, it was UNH. So this one was not a mystery one. This is one where they just decided to take a position. And now it's in. Is Bill Ackman's out? Oh, Bill Ackman just came out. Let's see. Bill Ackman, by the way, bought Google at $90. So he's been in Googs for a while. Okay, let's see. Bill Ackman sold a little bit of Uber, sold a little bit of Brookfield, kept Google. No, sold 10% of Google Class C, kept Google Class A. And this is what I mean, guys. You guys are saying his average is 243. Look at the reported price on Bill Ackman. It says 243. That doesn't make any sense. Bill Ackman bought Google since $90. So you really can't trust these reported prices to estimate their average. Like Bill Ackman's stake is not $243. Like he did not buy it all in Q2, so there's no way it's possible for it to be 243. But QSR, he sold 0.32%, and then Amazon, he kept the same. Okay, so he didn't do much. He sold 10% of Google, but he still has 10 million shares. He sold a very small amount of Uber. And he sold a little bit of restaurant brands. That's it. Tanner says people are saying AI is overhyped and you have Buffett buying in. Make it make sense. No, I agree. It's hard to make the argument that the market's having a little bit of turmoil because of AI. I really do think it's because of the Fed and the lack of confidence around interest rates. Not because of AI being dead. Wow, this Buffett news pumping everything after hours. You got a lot of stuff moving green after hours based on this. Market's just happy to see Buffett put his hat in the ring and say, I'm in. Nebius, CoreWeave, all these guys getting a move. Google right there, 281 after hours. It was kind of crazy. I didn't know who thought that was going to happen. Like, I really did not expect Berkshire to make that big of a purchase. If anything, I thought they would have added more to some of their core positions or just raised more cash. But I guess Greg Abel is thinking about a different way. Altimeter's out. Do we have it? All right, let me see. Altimeter. Okay, here we go. Let's pull it up. This is Brad Gerstner. Let's start off with new positions. Google. 313,000 shares of Google, 1.6 million shares of Gemmy, which is a crypto company, 969,000 shares of Baba, 744,000 shares of Broadcom, 258,000 of Synopsys, Pinduoduo, 1.3 million. And then I don't know what NTSK is and PTRN is, but he bought a couple 100,000 shares of those guys as well. Wow. Google, Broadcom, Baba, and Pinduoduo. Ackman, Gerstner, and Buffett, all in Google. Closed out. He sold CoreWeave, 650,000 shares. IoT, 2.9 million shares. Datadog, 881,000. He added to Amazon, 702,000 shares. Added to ARM, 164,000. Added to Microsoft, 103,000. Added to TSM, 201,000. No change. Or reduced. Let's do reduced. Reduced. They sold 650,000 shares of Hood, which is reasonable. They bought it at $30. They sold 11,000 shares of Meta, sold 8,000 shares of Mercado Libre, sold 4 million shares of Confluent, sold 1.4 million shares of Coupang, sold 891,000 shares of Instacart, sold 600,000 shares of Nvidia, still have 7.6 million left, but they did trim 11,000 shares of Meta, Uber 364,000 shares, Snowflake 397,000 shares, Zillow 200,000 shares. He does not have AMD. He does not have AMD. So selling Hood, normal. I mean, they bought it at 40. It's up triple. They were probably going to take some profits. Meta, Gerstner's been in Meta for a long time. Still has 1.8 million shares, so it's not like it's not a large position. Nvidia, also not that big of a deal. They have $1.4 billion of Nvidia. Decent position for them. Uber and Snowflake a bit more aggressive on the sells. Zillow a bit more aggressive as well. And then Instacart and Confluent. Confluent, the big one, about 4.2 million down. Huh. So the big story is everyone is in love with the Googs. Dude, Sundar has got to be feeling like the man right now. Like, Sundar has got to be feeling like the man. Is Googs moving on this even more? Googs, it's only flat because it's been a crappy day or a crappy week. If this was like 4 weeks ago and this news came out, you could argue Google would be above 300 by now, dude. This is big freaking news. I don't see NVIDIA's 13F yet. Not out yet. This is Whale Wisdom. For those that Whale Wisdom is the website, and then Data Roma is the other website. If you want to go to it yourself. Co2 Management, we have their 13F. Top buy is Google. Hold on, let me pull this up. Is the top buy Google? Let me see. Holdings. New. Co2 is a relatively large firm. Wow, they added 2 million shares of Google. Oh my goodness, dude. 2.091 million shares of the Googs. They added Figma. They added Applied Materials, Klarna, Snowflake, and Synopsys. Dude, why does everyone like Synopsys? I keep seeing this name pop up. What is so special about this freaking stock? It's down 20% year to date. Do we need to do a deep dive on this? SNPS. I keep seeing it pop up. Oh, man. Benny, Zocold, and Austin. You guys got to go to Vegas this weekend. You guys literally have to book a trip to Vegas this weekend and celebrate. And you have enough Google gains to book the trip, all three of you. And you got to take 3 shots. One for Ackman, one for Altimeter, and one for Buffett. That's what you got to do. Wow, that's incredible. 2 million shares of the Googs. Let's see what they closed out. They sold all their Lily. They sold all their Yum. That's a Chinese food brand. PM, GRNC, and then LX. What about added to? They added to Marvell. They added to Webull. They added to Trade Desk. They added to Spotify. They added to Oracle. Added to Meta, Microsoft. Baba, they added 1.1 million. They added to iBit. They added to Enphase, DoorDash, Carvana, Broadcom, AppLovin. And then they continued to add to Google. That was the other Google Class C. So they have both versions now. And then reduced, they sold 307,000 shares of Tesla. They sold 121,000 shares of GE Veranova. They sold 1.6 million of NVIDIA. Sold 1.1 million of Nubank. Tanner, I'm sending you the link on Twitter. And then they sold 1.5 million shares of KKR. This is quite incredible, dude. This really is quite incredible. I mean, and again, buying Google is heavy validation for just this broader AI trade, which matters if you're in a lot of the other AI names, even if you're not in Google. I mean, if you want to keep this broader narrative up, then having someone like Buffett validate Google does matter. AMD right there, 291,000 shares down. Wow, they sold 11 million shares of CoreWeave. They sold 105,000 shares of Chime. They sold 1.4 million of Amazon and then 2.3 million of ARM. Stanley Druckenmiller, is that one out? Let me see. Nope, but we have Bill Gates. Let's see, did Bill Gates buy Google too? The founder of Microsoft just say, I'm going to buy Google. Okay, he didn't buy anything. Sold 10% of Berkshire, sold 10% of Waste Management, sold 65% of Microsoft. Bro, this is the Bill and Gates Melinda Foundation. That is what? 65% of your Microsoft? I get that Microsoft's done well, but goodness, that's over a 50% reduction. They sold 13% of Caterpillar, 7% of Walmart, 5% of FedEx, 5% of Kraft Heinz, and then 5% of Hormel Foods. That to me is Bill Gates saying, I'm just going to take my profits. I don't care. I mean, they still have 9 million shares, but goodness, that is a very heavy decline right there on Microsoft. Let me see if the Stanley Druckenmiller one is out. Let's see if we have some coverage of these 13Fs as well. NVIDIA one I still don't see yet. NVIDIA not out yet. Yo,
dude,
this was
what
a big
the
one.
heck just happened? Brad Gerstner, Warren Buffett, and Couture Management hold the same position. You got growth and value all saying Sundar is doing the right thing. How's this possible?
I mean, did you at all expect Buffett to? Did you even think they would do this?
No, I wasn't thinking about it. I mean, it didn't. You know, the UNH play made a lot of sense, but this is quite interesting. I want to remind you of something really quick. I remember you showed this on your stream. You ended up showing this. Do you remember this?
Oh yeah, I do.
This is the Couture Fantastic 40. These are their favorite 40 names for the AI and blockchain trade. Google's not even on the list. How crazy is that?
I remember you pointed that out.
Google, Apple, these names aren't on the list. And now I thought I was going crazy because I clicked on their website. Google is on the list now. They changed the list, but whenever it came out, I still have this screenshot. It was not there. So they've completely changed their tone on Google. It just goes to show you how much, people have changed thinking about this name.
So do you think this is a Buffett decision, or you think it's a paradigm shift that Greg Abel is initiating in the firm?
No, I don't know if it's a Buffett decision, but I do just think that I've always thought this search is probably one of the best business models there's ever been. The margins are incredible, and the fact that they're not losing market share there, and they're getting the same take rate from AI overviews and AI mode, it probably just confirms to them that they're sticking around and this business is going to last another 20 years. So I don't know. It's really exciting to see though that they're in.
Dude, that's a heavy position too. 4 million shares is not a joke. Like,
I think that this is like you said, this is kind of good for the entire market. I think this is sort of the seal of approval from Buffett to say, hey, this CapEx spend is fine. You would think that they would be on the complete other side of this trade. Where's the ROI on all of this spend? You know, that they would be the most like they would question this type of spend, but they're not. I don't know, man.
Okay, so when Buffett bought Apple, and I know you know the history of this, you know, they thought of Apple as a consumer hardware. They never really called it a tech company. They struggled to ever say it's a tech company. They said it's consumer hardware. Do you think there's some philosophy they're using on Google that is not necessarily intrinsically rooted in technology, but there's a bigger picture they're seeing to the investment?
To some degree, yeah. I don't think that they care about the actual technology as much as they think about just the recurring high margin business. Like even in an AI trade, is advertising going anywhere? You know, are they completely diversified in every single geography and across many businesses, subscription, hardware, search, YouTube? Like what platform have they not entered? And if there is a new paradigm or place for Google to go, I think the belief is now they will enter that space. They're okay to go after consumers. They're okay to go after businesses. They have a massive cloud business now that's doing extremely well. I'm sure just all aspects, it looks very diversified and more of a safe play than people would have said $100 ago. You know, like it's gotten more expensive and yet people think of it as a safer name. That's an interesting place to be.
Someone says Amit's trying to make it more philosophical than it is. No, I'm serious though. If you watch those early Buffett interviews in 2016, he refused to say it was a tech company. He said the iPhone is a consumer hardware device that we think billions of people will continue to upgrade, which is why they kind of understood it as like, okay, people always need to eat ketchup with their hot dogs. People always need to upgrade their phones. I mean, this is how Munger and Buffett talked about it. So I'm trying to think, is there any way they could apply that philosophy to Google? And I mean, you have Android, obviously, and you have that stuff, but I think it's deeper than that. And to your point, Tannor, I think that it's them saying, well, search is amazing and the CapEx stuff is inevitable. And if we're going to take any bet on this industry, I mean, they already did have Amazon, so it's not like they're totally opposed to these tech companies, but it looks like I wonder
for how long, because Berkshire Hathaway is in a pretty unique situation where there's only a handful of companies that they can even invest in that's going to make a sizable change in their portfolio.
Yes.
So how long, how many quarters, how many years have they had their eyes on Google and not pulled the trigger? And something that happened within the last 3 months had changed their mind to say, and honestly, it could be the keys going over to Greg, and Greg says, hey, you know what? I've wanted this name for the last 5 years. So, but it is interesting, the timing of this name going into the portfolio.
Do you think, I just thought of this, do you think they bought Google because they know the Gemini partnership with Siri is going to be so big and they have this obviously big stake in Apple and they're like, well, if AI is going to change the world on consumer hardware and Google's the basis for that because they've spent all the CapEx, Apple hasn't spent any CapEx, then we might as well buy into Google?
Well, how big is the Google? I thought it was like $1 billion a year deal or something.
Yeah, but it's going to be powering all the Siri on 2 billion devices. But you're right, it's not a lot of revenue, to your point.
It's not a lot of revenue, and my understanding it was private servers and private data. I don't know what the upside is for Google on the Siri thing, but it's clearly not the revenue. I mean, $250 million a quarter, like you could take it or leave it, it wouldn't even change the quarter.
Yeah.
But this is freaking exciting. I like it. It's not just Warren Buffett and a bunch of value investors coming in. You have Brad Gerstner and Courtu Management coming in. These guys are growth at all cost investors going in with Warren Buffett. How interesting is that? Like, I don't know, man. I think that this is good for Nebius. By the way, I took a position the other day, yesterday.
You're in.
I had to trim NVIDIA in order to buy Nebius.
Wow, you got that convicted on it?
No, it's not that. I think that one is not going to do well without the other. Either the data center play is real or it's not. And there was quite the sell-off on Nebius that allowed me to get into a decent position. And in the morning, whenever I sold, I think NVIDIA was down 3%. Nebius was down like 9%. I was just taking advantage of that single day trade. Well, 5-day trade. And yeah, I don't know. I'm looking at the price reactions, the market reaction. I don't think they're going anywhere. Until I see companies say that they are going to stop spending, I don't care what the market is saying. Clearly, everyone is saying, hey, capacity is like the second we get these chips set up, they are immediately running at full capacity. We're selling out every single GPU that we possibly have. Like, we cannot buy enough. They're not going into debt to just, go into debt. It's because every dollar that they spend on these GPUs, they're getting $8 out. Right. And so I was listening to your conversation with Chris the other day or yesterday, and I don't agree with him fully. If they want to stop spending, the servers that are still set up today are still going to run at full capacity. It's just that they're trying to secure future capacity for future growth.
Right.
So the day that they turn off the systems is only going to affect bookings. It's not going to affect growth rates over the next couple of years. These data centers are not popping up tomorrow. They're, multi-year cycles. So, no, I think these large contracts are happening. I think AI is a very real thing, and I think it deserves a premium.
Dude, I 1000% agree with you. I started to like the neoclouds a lot more, and Nebius, given the diversified business model as well, to me, got a lot more attractive. And their founders, quite frankly, I just like their management team and kind of the veracity of ambition that the guys that are running it. But I didn't expect Berkshire to do Google. I thought he would have added more to UNH before this one. So
I think it's a pretty good sign of approval.
Can Greg Abel go full FinTwit degen? Can he get some Rocket Lab, some Hood, some SoFi?
Dude, doesn't it give you a sign of approval of just where we are in the market as well? These are the names that people were most concerned about, right? And what happened to the Buffett index? What happened to recession fears? You're throwing out $5 billion to, or it's probably less than that. They probably put a $4 billion purchase on it, but $4 billion out to Google in an AI bubble. I don't believe that. I don't believe that.
Berkshire has more treasuries, more T-bills than the Federal Reserve. There is no way they are investing in Google if they think this is all a bubble. Because if it is a bubble and it pops, Google will survive, obviously, but it's going to get slammed. We know that's going to happen. And Buffett entry price is a big deal for Berkshire. They're not willy-nilly going to pay whatever price and just average down. They are very serious about their entry. So they had to take a lot of consideration into buying at around 170, 180 whenever they bought.
They trimmed Apple, the company that's being extremely conservative on CapEx. They trimmed Apple and they bought a company that's investing hand over fist.
It's a good point.
I don't know, man. And I think it's honestly just goes down to valuation. You look at Google and potentially even Meta in future quarters, they look extremely cheap just based on the forward PEs that they're expecting, let alone the beats that they've been putting up for many, many years before this CapEx cycle. These are great businesses. It's not just about technology or artificial intelligence. They have high margins and they move quickly. And that should be exciting for all types of investors. And you're seeing that between Brad Gerstner and Warren Buffett. Is there another company that both of those name, how often do those Venn diagrams go over top of each other? Cotu Management and Warren Buffett. That Venn diagram must, cross over once a decade.
Brad Gerstner is basically a retail FinTwit trader, but takes sizable positions on his bets. The fact that he's one of the only hedge funds that I know that has an actual brand image and took a position in Robinhood at 30. No one's doing that. So the fact that he was not the biggest fan of Google. You remember those interviews a couple years ago where he was like, Google's dead. For him to pivot and for Ackman to stay consistent on it, and then Buffett to get in, and then Co2. You're right. This Venn diagram does not happen often.
You got growth investors, activist investors, and value investors all buying Google right now. Like, that is pretty interesting. I wasn't even bullish on Google a few years ago. Like I didn't get the dips. I remember talking with you and Matt Money at like $90, and I was like, dude, ChatGPT is going to eat their lunch.
Yeah.
And then they started to talk about, no, I mean, we have the cloud, we have the data, we have the people, we have the distribution, we have every aspect of this future. Like, it's ours for the taking. Their founders came back to work. I don't know. It's pretty interesting. Anyway, I'm not going to stay. I just, once I saw that Couture's Fantastic 40 has just changed, how freaking interesting is this? Oh man, I'm super excited for Google's future, Amazon, Meta. I've become the opposite of a degen through this AI cycle. I'm actually not chasing gains as much. I'm going more towards the Mag 7 than ever in my life.
Me too. Me freaking too.
Like,
my only Mag 7 this year was NVIDIA because of you. And as we've seen the impacts of the hyperscalers, it's like, well, how do you ignore those? How do you ignore them?
and now, what are your Mag 7 names now?
Meta, Google, or Meta, not really Google. I had calls on Google. I sold those. Meta, Amazon, Tesla, and NVIDIA.
Isn't that crazy? That's crazy to me. Like, that's so exciting. And no one, out of all the people that we talked to, not enough people are buying Microsoft, I don't think. I mean, even Bill Gates is selling Microsoft. But hey, you don't, I honestly, I think in this market, you don't even need to chase these extreme gains and go to quantum or like eVTOL type names. You don't need to buy names that are not making money. You can buy the companies with the highest profit margins and make out like a bandit, because people do not, for some reason, want to buy companies with a T behind it. Like if it says it's $1 trillion company, people think there's no gains. We saw this with Apple. Like, whenever Warren ended up buying Apple, it was like $1 trillion company. They were the first company to break $1 trillion. Then they were the first to break $2 trillion, $3 trillion in a matter of a few years. That's a triple. Like, he had way outdone the market by buying the biggest company in the world. There's so much money to be made at the top as long as they continue to expand, and it does look like that's what's happening here. I'm done with my tirade. This is exciting times.
No, it's real. And those companies have moats. And it's easier to sleep at night, especially through these drawdowns when these companies have moats. There's Tanner's Twitter. Tanner, just last question for you real quick. In terms of the drawdown, the volatility of this week, I'm assuming you're just staying steady and not really changing your philosophy.
No, man. I'm buying a few names here and there. Like I ended up getting in tiny positions in Meta, Axon, Nebius, Reddit. Today, actually, can I break some news?
Yeah, go ahead.
I repurchased a PayPal. Small position. Okay. But if you guys look, it's the cheapest price it's been from an enterprise value in a decade. Like, I mean, you look at EV to free cash flow, you look at, there's so many metrics that this is being priced at the cheapest valuations. And I think just
got to
Google
62. I didn't know it got to 62 today.
Dude, 62 after their OpenAI deal, after agentic commerce plays, after they're offering 5% cash back, and people still think they're going to lose market share. I just don't believe it. Braintree is reaccelerating at really high margins now. I'm calling the bluff.
You know, your boy bought 4 million shares in Nubank too, right?
Are you talking about yourself? Who's my boy?
Yeah, I bought 4 million. Yes, I put $72 million into Nubank.
You're doing well these days. I'm seeing the donations and everything. Like,
oh, so you didn't hear this news? You don't know who bought Nubank?
No.
Howard Marks.
Oh, I did. Sorry, I did hear that yesterday. Yeah.
Yeah, he bought Nubank.
Yeah. No, I think that's an exciting name as well. Dude, everyone hates payments right now. And I think very much like Google, they're not all going to go away. And I think it's just an extremely hated part of the market right now. And I think they'll do fine. I mean, I'm sure that like there's going to be margin compression and everything like this, but a lot of them are actually beating on revenue and beating on EPS. And then people are complaining about take rate. Like, why are you complaining about take rate if they're beating on revenue and EPS? Like, make it make sense. You know, it's like, oh, their employee count is going up, but or they're beating on top line and bottom line, but they have to hire more. Who cares? It's working. The margins are fine.
I don't hate the PayPal. It's low risk. It maybe doesn't go to the moon, but it is. You're not gonna, I think, lose too much sleep with PayPal. I do not hate that one at all.
You have a couple more years before they rebuy this entire business. Honestly, the buyback is like 10% of the entire company per year, and they just issued a dividend. You don't think these dividend companies are holding, you know, tobacco businesses and oil and like many of these older names? They go, oh, we can actually diversify into this fast-moving tech name. I know people don't think it's fast-moving, but PayPal's been making a lot of changes. So, small position right now. I'm going to look at it like a trade and see where we go from there.
All right,
thanks,
Tanner. I love it. Thanks for your opinion. Talk to you later.
Bye.
All right, folks, let's get our next guest onto the show. We were supposed to do this interview last week, but it got delayed, so we're doing it today. Actually, after this interview, it's going to lead me to an announcement that I have to make, and it has to do with the Wednesday New York City event that I was at. So I'll be able to talk about it today. But this is a new startup. It is a company that I invested in after the founder messaged me after 10 years of not talking since high school, which is just crazy. But like, you know, life happens. You grow distant and then sometimes you reconnect. And they just raised 15 or 17 million in a Series A from Benchmark. I did tweet about it for those that saw this last week. The company is called FOMO. It's an incredibly interesting product. I got pitched on it within 20 minutes. I was like, okay, I'm in. Let's see what this can become. Here is Paul and Say, the founders of FOMO. What's up, guys?
Hey, Amit, how are you? How's it going?
Dude, you got me suckered into this whole startup thing. So
after 10 years, yeah.
do you know, Paul, do you remember? Because I don't think we talked about this. Our last round was at Byram Hills in the round robin.
No way, really? I actually don't remember that. It was at Harrison round robin.
Oh, sorry,
I
Harrison, you're right.
Yeah.
In
the finals. I think it was the finals. Yeah, I do remember that. Semifinals, maybe. I don't know. Yeah.
It might have been semifinals. Yeah, it might have been.
Yeah.
You know, I'm still mad you beat me at Scarsdale. Do you remember that one?
I do remember that one. Yeah. I think we were 1-1, right? I think we both won one. So.
Yeah, that was bad loss on mine.
Long time.
But we didn't talk for 10 years. He hit me up. He said, "Hey, I got an idea." So I'm gonna give you guys the floor. What is FOMO, and then we'll take some questions from the audience.
Yeah, thanks for having us, and yeah, really excited to have you as an investor. FOMO is a social mobile trading app. It's available on iOS and on Google Play Store. The best way to learn about it is just to download it. You can onboard in about 30 seconds and really easily access pretty much any asset on chain. So the tens of millions of assets that exist on chain, you could instantly access them on FOMO. Super easy to access. And then there's a social layer. So everything's transparent, and I think that's the whole ethos of crypto, but everything today is obfuscated by block explorers, and it's just super hard. Crypto UX is just really poor, right? And I think Robinhood did an amazing job that like created this brand new user experience for brokerages. And I think they onboarded millions of people that wouldn't be using Charles Schwab otherwise. And it's similar on FOMO. I think there's millions of people that want to access digital assets, and obviously mostly native digital assets now, but as everything comes on chain, equities, prediction markets, perpetuals, we'll have FOMO savings account with on-chain yield, etc. And you could constantly discover new assets. So if I go to a Meet Invest profile on FOMO, I could see every trade you've made, every trade you currently have open, and I get instantaneous notifications when that happens. So it's not like Nancy Pelosi places a trade and then she discloses once a quarter. But as soon as you make a trade, I can know, and you have a pretty good track record. So I hope we can get you on FOMO, and I can follow into some of your trades.
So the reason I got hooked on the app is because I downloaded it. I tried it. It's on the iOS App Store. And obviously, I'm a big Robinhood guy. A lot of my community is invested in Robinhood. And to me, the thing that Vlad keeps talking about is tokenization is going to eat the world in the financial sector. And the onboarding onto FOMO and the ability to trade anything, it felt like it was a regular financial app, although there's a lot of crypto backend that made the experience. I mean, even through connecting through Apple Pay. So I guess, can you speak a little bit about the tech behind it and why is it so easy to use the product compared to a lot of the other crypto apps? And can you speak a little bit to the growth? Because you guys raised from one of the best VC firms in the country, like Benchmark led Uber's Series A. So why do you think they were so confident to invest in you guys?
Yeah, I mean, first, thanks for having us again. Long time coming, and I think it's been pleasure to watch the previous people on your segments. And yeah, I think there's a lot of things here. So I think for one, a lot of people in crypto have typically built an app that is for crypto users, right? And these users have the ability to actually go through, set up different wallets, use different protocols, go through the bridging, go through the signatures, approvals, and all the complicated processes that the most normal person today is not really willing to do. And I think we're finally at a point in technology where you can actually do these things almost in a fashion that's similar to Web 2. So you have embedded wallets, which allow you to use Apple ID or Google ID to exactly spin up a wallet under the hood. It's stored locally in your device. It's sharded in such a way where it's very secure. You don't have to deal with signatures. You don't have to deal with private seed phrases. And you don't have to manage the security of it, which is a very cumbersome part for a lot of people. On top of that, the thing we actually allow you to do, as Paul alluded to, is tap into assets that already exist. There's great liquidity on chain for assets. These assets typically originate on chain before they actually go to centralized exchanges for the most part. And now we're giving you the vehicle where you can trade not across just Solana, but you can do Solana, Base, BNB, and a bunch of other chains to come in one universal experience where you just have a balance. It's just like a Robinhood account. You just pick your asset, you swipe. We do all of the technology under the hood. So you don't need to worry about gas fees. You don't need to worry about signatures. You don't need to worry about connecting to the right liquidity pools. You don't need to worry about bridging. You don't need to worry about what happens when you sell. Everything is taken care of and abstracted away. And I think we're finally at this point where, Web 2 experience has paved the way and Web 3 can kind of start to rival that. And yeah, there's been a lot of growth. We launched in May. I think we got off to a pretty decent start. We were able to kind of get this first wave of virality once we added the Apple Pay feature, which allows people to just come onto the app within 30 seconds, buy crypto. And I think it's the best in class. It's something that we spent a lot of time perfecting. A lot of other companies suggest they have Apple Pay, but you still have to go onto the platform, provide your email, your license, your bank account, and do all these things before you can get started. And that's not really a good starting experience, right? You want to be able to come on, find the token, and buy it immediately. And I think that was something that's really important to us, and we've done a lot of efforts to make sure that can be the case. And then we saw a second growth event last month when we introduced cross-chain trading. So, back in July when we added the Apple Pay feature, we were probably doing about $1 to $2 million of volume a day. Now we're doing 20, 25, 30 mil sometimes. And
it's a 20x increase.
Right.
Yeah, in the
over
past
the course of a
couple
few
weeks.
months.
Yeah.
So it's been a tremendous growth, and there's a lot we've learned, right? We've learned what users like, what users don't like. We're very good at getting user feedback and really listening to and understand at the core what they're trying to ask us for. And it's important to get to a place where you can iterate quickly on these things and create the best user experience over the course of time. And I actually think Paul can probably speak on the benchmark piece and how that story unfolded.
Yeah, I think one thing I would just add to that is that on Robinhood, you have access to about 100 to 150 digital assets. But on FOMO, you instantly have access to hundreds of millions, right? So I think Robinhood has done an incredible job creating a UX that people could access. But on FOMO, there's all these other on-chain assets that no one has access to, right? So the goal is to give them access to that for the first time. Where Benchmark comes in is I think a lot of people typically raise from these crypto native venture funds. And we raised an angel round earlier this year with about 150 to 200 different angels, and they're builders across the industry, a lot of CEOs that you might know, and a lot of top traders. And what that allowed us to do is create a distribution channel, but also tap these different ecosystems, right? So we love Solana, we love the Base ecosystem, we love Binance and all these other ones. And then where Benchmark came along is, you alluded to it, but they led the Series A of Uber. They led the Series A of Snapchat. They did Instagram, Twitter, eBay, and they've just basically done every big consumer app that's ever existed. Yeah, and
they don't do it lightly, which is what also got
Exactly.
my attention. It's been a few years since they've done a real consumer product.
Exactly. So they haven't done a lot of real consumer product in a while, and the last crypto investment they made was Chainalysis in 2018. And then I think they liquid bought some TON token because they did an investment in Telegram. But Yeah, I think Chayton like initially saw the vision almost instantly, and that's what really drew us to them. And the goal is to create a consumer product that can scale to hundreds of millions of people. I think the really interesting opportunity for us is it's a lot more than crypto. And we truly believe, we totally agree with Vlad's view on digital assets will eat the world. And I think that all these things will be tokenized and all these things will be available on FOMO. And what's really special here is the social layer. And I think eToro, Webull, like all these apps have tried in the past social finance. And I think the reason it didn't work is because it was still obfuscated. There was confirmation bias. Like if you want to be part of the social experience, you write a message, right? But you're only going to do that if you did well. And it's also kind of noisy. But on FOMO, because there's full transparency in everything. And by the way, you don't have to be like fully transparent with your own name. You can be anonymous if you want, but everyone still has full transparency into every trade you've ever made. And because of that, you hold people accountable, but you also automatically participate in the social experience. So if you make a trade on FOMO, then and you have a high enough notional, or if you're consistently a good enough trader, you automatically will appear on the feed. You'll automatically will start to gain a following on the platform, and then people will start to get notifications, etc. And we truly believe that a social finance application that starts to actually grow to all digital assets, it must start on chain because that's the only way you could create this mechanism where you get visibility into what everyone's doing. So that's kind of the thesis here.
So let me ask you this question, because I'm sure everyone's wondering this. How do you compete with Robinhood? Why wouldn't they launch social? Why wouldn't they launch more assets on chain? Like, I've invested in Robinhood early, and I made the investment you guys kind of on a bet that there is a different form of differentiation for you guys going after it, but also that the TAM is so big. So I do think there's going to be more than just Robinhood out there, but they are a big elephant in the room. So how are you thinking of them and Kraken and Coinbase and all those other guys?
Yeah, I think one of the things that, the view we take on this is that it's actually better for the industry at large as more and more large participants come on chain, right? Robinhood has Robinhood Wallet, Coinbase has Coinbase Wallet, and a lot of these platforms are letting more and more people access these things directly on chain through their app. But the way we've structured our application and the economy here is such that the best traders in crypto are always going to be on FOMO. So what does that mean? That actually means that these are the people who are going to discover assets the earliest. They're going to be able to find trending assets before they're actually trending. And this is an experience that is consisting of two parts of the economy, creators and consumers. Consumers are, everybody who's kind of getting into crypto, learning how to trade, understanding the market. And then creators are crypto traders. These are people who are using the platform because it's great UX. You can do things cross-chain very easily. You can do it under one balance. You have alpha. And also, you just don't have to worry about some of the things that actually end up kind of plaguing your experience as a crypto user, even if you are somebody who uses every day. So I think for that reason, we're always going to have the advantage on FOMO. And you get to this point where every user will come to realize I actually am better off on FOMO because I can see directly what's going on and I can see the sausage making before, it's too late and before the centralized exchange participants, get to a place to see them. Obviously, we very much respect what Robinhood has built, and they are trying to do a lot of social features as well. But I think the way we view this is like crypto does have to be the place where social starts. So right now, everything, as Paul alluded to, happens on chain. It's transparent. We just expose it in a very different form that's not the block explorer. Robinhood's trying this social feed where you need to have an opt-in feature. You need to, publish your comment. And there's a lot of confirmation bias. And I think there's a lot of consumer protection laws that prevent them from actually sharing this information at scale. Versus for us, we're just taking this thing that's already decentralized, that's already permissionless, and we're just giving it a very good UI and UX such that everybody can understand it.
Okay, there you go. 17 million from Benchmark is not easy. So I'm happy I got to participate in it. I guess last question for you guys is, in a year, where do you guys want to be? Whether that's growth or numbers or just overall size of the business, how do you think this is going to grow over the next year?
Yeah, I think these things grow exponentially. There's definitely some market dependence because you're a trading application, and we're really focused on the next 5 to 10 years, right? Trying to build a behemoth here and something that people love to use. And I think everyone's been looking at the moment where we can onboard millions of people to crypto, and our goal is to try to be the gateway. I mean, I hope that we can have millions of daily active users in a year from now. I think that's our goal, and just create an experience that gives people joy and that people want to use. Like, the reason we got into this is not because we were trying to make money. It's because we say was trading and trying to get me to trade, and the experience is just abysmal. And we were like, there needs to be a product. Like, if you want to send me Bitcoin, it shouldn't be that I have to send you this like 32 random alphanumeric key string that you lose or you type the wrong number, or it's just not a great experience. There should be some seamless experience to access on-chain assets and be able to send your friends crypto, etc. And that's what we're trying to build.
All right. I love it. Paul, say thank you. I will
Yeah, thanks for
definitely
having
see you
us.
in the future in New York. Yeah. Thank you guys.
Yes,
We'll
sir.
talk
It's been a
later.
pleasure. Take care.
Later. Okay, there you go. That is FOMO. So that is the investment that I made. Again, does it do well over the long term? Does it go to zero? I have no clue, but there are some things about just people in your past life, especially if you've kind of, known who they are. And I know it's been 10 years since I talked to him, but Paul was one of the best debaters back in 2016. And so something about work ethic, the TAM, and the overall idea of tokenization is what got me excited. I don't know how they're going to largely compete with the other crypto apps that are out there, but the point is, how did Robinhood start competing with Coinbase with crypto? I mean, you just built a better user experience, and ultimately that created the moat that allowed more people to get in. I think the broader question here about tokenization too is interesting, because if you have other assets, not just equities, that get tokenized on chain, and you have more liquidity pools that are offered because so many more people are trading a house on Open Door, for example, on chain, and you get access to that via Robinhood, Coinbase, Kraken, or FOMO. The question just becomes who has the best go-to-market to be able to get all those users on the platform. And we're going to see which ones end up winning. Now, the reason I also made the investment, and this goes into the announcement of what I did on Wednesday, or where I was on Wednesday. And this is now basically official. It's getting confirmed next week, so might as well say it here, is I am becoming a scout for Andreessen Horowitz. Andreessen Horowitz, one of the best VC funds in the country. I'm becoming a scout for them. What is a scout? A scout is essentially someone who tries to find new startups to invest in without my own money. So basically, they're going to give me a pool of capital. It's a couple $100,000. And that's becoming a Girl Scout. Yes. And I'm going to get to be able to invest that couple $100,000 into a bunch of different startups and founders and ideas. So how did this all start? First, before I get into it, I just want to say this before we get into it. If you have an idea, next week, I'm officially making a website. It'll probably be like a mid VC venture. It'll be like my sort of venture angel investing profile website with a specific email. Email me. If you have an idea, if you're trying to start something big, if you're trying to build out something, this is why I said it could be very interactive with the audience. I got Andreessen Horowitz money now to throw somewhere. And the event I went to in New York was basically them having a fireside chat on a framework on how to invest. And it's very laissez-faire. So I'll talk about the details on how this happened. But at its core, they don't really care about the money. They care about the ability to connect with influential people, and then those people potentially find the next Uber, the next Robinhood, the next Snapchat. And Jason Calacanis has the classic story. He was a scout for Sequoia. Sequoia is one of the biggest VC funds. They were actually one of the earliest investors in Robinhood. And Jason Calacanis back in 2008 found Uber as he was scouting for Sequoia. And because he had Sequoia Capital that was institutionally supporting him, he was able to invest in Uber. And, that built his brand. Obviously, Uber became a multi-$100 billion company, and Jason made like a couple $100 million off that. And so the investment did very well, but his brand as an angel investor grew. And then Jason was able to invest in Robinhood and all these other companies. And so you kind of got to get that one big investment in the angel space, but it's really hard to get it. I mean, just like it takes, a lifetime to find that Palantir or that Hood. And I've been incredibly blessed over the past couple of years to get those names and get them early. VCs go a lifetime trying to find an Uber at 5 million that turns into 200 billion one day. And I don't know if I'm going to be even good enough to find it. I quite frankly am taking this opportunity because I don't know if angel investing is something I'm good at or something that I would even be interested at. If you gave me like $100 million and said, start a VC fund or a hedge fund, I would start a hedge fund any day of the week because I just love investing in public companies and analyzing them. But there's a lot more upside if you find a Robinhood or Uber when it's two guys in a garage and you could give them $50,000 and that 50,000 could turn into 5 billion. So having said that, when I put out the new website next week, if you have an idea you're working on, if you're passionate about something, I'm trying to invest at the absolute earliest of stages. Can't guarantee that you will get an investment, but you can send a pitch and I'm willing to listen to it, willing to look at it. And quite frankly, if there's a little Uber somewhere in this chat that's willing to, take a pitch and potentially become the next big thing, then I would love to be close to it. And one of their pieces of advice was try to invest in your friends and people that are close to you, and at least in some proximity, because like at the end of the day, you're investing in people, and the idea is secondary to the people, and hopefully the idea is good enough for the person to execute on it. But if you're going to take a flyer, then you're going to have to do the best you can. And then on top of that, so how did the story even get started? So the way this got started, they didn't reach out to me, quite frankly. I reached out to them. And the way this worked is like, I made the investment in FOMO with my own money. And so I just started thinking, and I made a Figure investment. I invested in Derek's startup, Apptronic. I invested in that. So I just started thinking over the past couple of months, like, is there a future where I can broaden my reach of angel investing and hopefully get a little bit more experience in finding these companies? And then for some reason, that Jason Uber story just hit me. I don't know how it hit me, but it hit me somehow. And I was like, let me message one of the guys at Andreessen. Again, this is one of the best VC funds in Silicon Valley. It's them and Sequoia. And let me just see if they'd be open to having a conversation about me being a scout. And so I go to the profile, and this is why building a brand is so important, and like continuously creating content, and you just never know where it's going to go. I click on one of the guys' profiles, and he's already following me. And I'm like, oh shit. So I send a DM, and I was like, hey bro, can we talk? I would love to be a scout for you. Within 2 minutes, he responds. And I'm like, oh, like he's been keeping up with my content. He's like, yo, bro, I love your content. I was like, holy shit. I was like, all right, let's get this done. So then we set up a Zoom, and the Zoom was last week. And the Zoom was like 10 minutes. He was like, so what do you want to do? I was like, well, I'm just building more of a brand. I'm, building more of a connection. I'm getting a lot more awareness. So I think there's a chance that I could find the next Robinhood. I don't know if I will, but like, just given the gravity of the brand, that there should be a shot that I can meet enough founders where there's a potential to make the investment. And one of the biggest things that these VC funds look for is people that have a little bit more distribution and reach, because like to find the next Robinhood or the next Uber, you have to go through thousands of deals and ideas. And even then it's almost impossible. Like these are really once in a lifetime companies, which is why they return so well, and why, American venture capitalism has done so well over the past 40 years. So you got to really find people that have a chance to even get access to those deals. And so then, within 10 minutes, he was like, all right, sure, let's do it. And the event I went to in New York was their scouting event. They do a couple every year, and this was the one in New York City. And amidst I found this great startup. It's called AK Media. Can I invest in myself? Can I just take the whole fund and put it in me? That'd be hilarious. And then so I went to the event a couple of days ago, and it was a great event. Met a lot of people. And it was super cool. And I think there's like 40, 50 of the scouts that they have. And some of them have been doing it for years. Some of them have been doing it for a couple months. And I think I was the earliest one, because sometimes you got to just ask, bro. Sometimes you got to just ask. And so I just had the idea to ask. Bitcoin, by the way, back to 95. S&P up a little bit, 672 after I was Google. Are we still holding? Google up 1.5, 281. Sometimes you got to just ask. Made the ask. And we got the job done. So it's going to be super exciting. Again, if anyone has any ideas, I will get out an official email next week, and this will be the start of the angel investing part of my career. I don't know if I'm going to be good at it. Quite frankly, the batting average is like literally 0.1%. It's really not easy to find good deals. And that's why, whether you hate or love FOMO, Benchmark is giving them $17 million. I mean, when you see freaking VC funds like Benchmark, Sequoia, or Andreessen investing, they did way more due diligence than I did. I did 30 minutes of work. They probably did months of work before making the investment. They obviously saw something that was special, in spite of it potentially failing, because maybe Robinhood eats them alive, which I know that could happen. But I'm also like, well, if they don't and they work, then the investment will do better than any investment I made in Robinhood, because it's going to do way better than 10x. These VC investments tend to compound aggressively. And then second of all, it's just one of those things where it's like, okay, how many good opportunities and deals are out there? And for those that missed it, they said they were doing $1 million in trading volume a day, which is already impressive for a brand new company. They're doing 25 million a day now. Like that's 1 to 25 in 3 months for a company that none of you guys even knew about, right? Like how do you get $40 million of trading volume happening per day for a startup that's in the crypto space that a lot of people just think is going to be the next FTX or some random crypto scam that's going to go to zero? Like that's not easy to do. And so I think from that perspective, they really nailed distribution. They nailed the product in and of itself. They're not giving you some like 25% yield to get you to deposit money like FTX was doing. Like there's none of that. If you download the app, it's just pure social interactions that's getting people to be addicted to it. Now, if we get into a bear market, the thing probably goes to shit, right? Because, but so is Robin is going to go to, like, everything's going to fall. If people stop trading crypto, that's going to be bad for them. But whenever things do get bullish, if they are one of the products that survive, that's why I took the chance on them. So my idea right here is to try to do that for everyone else. And so that's it. So there you go. That's the announcement. Your boy's a VC now. Your boy's a VC. Can I have $1 million? I'm taking the chance. I'm asking. Yeah, the checks are going to be small, guys. They're going to be like 5 to 25,000 max. They're not going to be big checks, but I just want to say you guys now have the potential access to some institutional capital that's there. It's just, it depends on the idea, and then it depends on if there's something to invest in. I'm not leaving. So many of you guys thought I was like taking a gig at CNBC or some shit, bro. So many of you guys thought I was like freaking going to Bloomberg or some shit. No, like this literally affects no part of my day-to-day outside of potentially taking more meetings to see if there's any investment opportunities. But outside of that, that's it. And the other reason I did it as well is because, and quite frankly, this is what the Andreessen guys said yesterday. They don't really want scouts to help them find the next Uber. I mean, like, yes, that would be phenomenal, but they're Andreessen Horowitz. Like, if there's the next Uber potentially around, there's a good shot that Andreessen's going to somehow find their way to getting into it. And, if they miss it, they miss it, but there's very rare misses that they get. They really just want to be connected to people that are growing in a niche, my niche obviously being finance. And in their words, they said they want them to be closer to the firm, because at one point, at some point in decades, the people running the firm are not going to be running the firm anymore. So they need new talent to navigate it. And I don't know if I'm even talented enough to be a VC or even a VC partner at a firm like that, but you got to try. And being a scout is like the best way to at least get a chance to try. What happens if you're wrong? Do you owe them the money back? No. So if you're wrong and the money goes to zero, then that is the risk they take by giving me the money. So again, they have 65 billion AUC. They're giving me a couple 100,000. Like, they really don't care, quite frankly, if it goes to zero. But if it doesn't go to zero and the one Robinhood happens to pop out of amidst random $10,000 check to some person, like, that could become a $65 billion company one day, right? So it's like, for them, it's really a spray and pray approach. But when you're spraying, you have to have people that can effectively get the distribution to even have a chance to then do the praying. And that's where the scout program comes in. So that's what we got. That is the announcement, and that's what we're going to do. Yes. Oh, that's another thing. Are you going to let some of us invest in the startup? So that's the other thing I wanted to mention. Thank you for that comment. If there is a really good deal and the deal is raising money and I'm able to put some money in from Andreessen, then I will show you guys if the founder is willing to like let other people invest in it. So that's the other thing I wanted to mention. Like, if I can find a really, and again, I'm saying this with a lot of conservatism here, because I'm saying if I find a good deal, like we're talking about, it's hard to find really good deals, right? It's really freaking hard to find good companies, like incredibly difficult, especially at the early stage. The early stages is when most people lose their money. So I will only bring a deal to you guys if I really think there's a shot. And even then, there's more likely a shot that I'm wrong than not. But if the branding of Andreessen Horowitz allows me to help find some of these companies, and I really do think that there is a shot that this kid's going to be the next Vlad Tenev, then I'll bring it to you guys, and hopefully I can convince that kid to let my audience put some money into it, and then it goes from there. But that is the idea. It's a roulette table. Yeah, it really is. And the only way to make it not a roulette table is to have deep personal connections with the people you're investing in and truly see if there's potential and if there's vision for them to build something big one day. But again, that takes time. It's hard. Like, I met some people at the meeting a couple of days ago that haven't even spent all of their investment capital. It's been like 2.5 years because they just can't find the best opportunities. And so now their approach was, hey, like, they want you to spend the money quickly. They don't want you to like hold on to it forever, because eventually you got to take some risks, but they also want you to just be diligent enough to try to develop a framework to find the best investment. I told Steve already, he likes it. He thinks it's a great idea. This is what I asked Triple V about. By the way, NVIDIA's 13F is not out yet. Dan Lobes is out, but NVIDIA's 13F is not out. So I'll see if I can get it. But I was asking Triple V about this, and basically the idea was, you guys know I don't do brands, I don't do sponsors, I don't do any of that stuff. So whenever I take a career and I'm not getting paid by them, by the way, I own the unit economics on this. If I do find the next Robinhood, then I keep the carry if the investment ever, returns in a significant way. But it's not like they're paying me a salary or anything like that. Like, the fact that I even access to the capital is enough, right? But I don't do brands, I don't do sponsorships, I don't do any of that stuff. So for me, in terms of like career trajectory and expanding what I'm doing, first of all, VC is very exciting. It's totally different from the public markets. By the way, Brad Gerstner kind of does both. Brad Gerstner, his fund is basically a VC fund and a hedge fund at the same time. So he's kind of the sort of he is emblematic. He's the perfect sort of recipe of what I am thinking could happen one day. Obviously, there's a lot of room to build to get to that level, but you've got to start early and be able to take those risks and see if you're even good at it in the first place. But the VC model, I think, is really interesting. And so in terms of expanding the brand, the question then becomes, who can you be associated with that has the institutional support on your side to help you expand that brand? And there's three names: Sequoia, Benchmark, and A16Z. And the thing about Andreessen is they actually are embracing media. If you've ever gone on their YouTube channel or Twitter, Mark Andreessen, Ben Horowitz, again, legends in the tech space. Mark Andreessen built the first web browser. I mean, they put out a lot of content. Like, they are like Sequoia and Benchmark. Benchmark says nothing. Sequoia, says some things, but these guys put out a podcast every freaking day. And so from a media perspective, I'm like, well, I do a lot of media. And so I saw a lot of synergy between connecting my brand and Andreessen's brand, because we all do content and we're all constantly communicating. And so if there ever was a synergy with a VC fund that actually has a public image, I think it would be Andreessen. Do you get dental benefits? No, there's no healthcare or dental benefits. But I thought it would be a good idea. I thought it would be at least worth a shot. And then when I reached out and they immediately said yes, I was like, okay, so this is something that they at least knew who I was, and they were excited to talk. And then, after talking, we got it done. So I think it'll be cool. I think it'll be fun. Hopefully 2026, we can find some investments. I fully expect most of the investments to not work out, but again, you just got to put your hat in the ring. It's kind of like stocks, right? I've just been very lucky and privileged that the first two real public ones ended up working out. There were a bunch before them that, when I was much younger and didn't have a brand on YouTube, I made that went to zero. But the two big ones that were public, Palantir and Robinhood, have worked. And so if we can find the next ones in the angel space, maybe that could be exciting. That's what we got. Okay, NVIDIA's 13F. I don't think we're seeing any changes on this one. It looks like they didn't do anything in this quarter. They still have CoreWeave. If anyone has a specific one, let me know, but I don't see any changes in this. I don't see any changes in this one. Can you put your own money in too? Yeah, I believe so. I believe if I really like the deal, then I might put my own personal capital in it. But, the reason I even decided to do this is because, like, I have personal capital to invest in some of these deals, but I'd rather use someone else's capital, because more likely than not, you're going to lose, right? You're going to fail. And so, like, it's going to be very hard for you to actively invest if you know you're losing your money. But with a VC approach, they don't care if you lose money. They just want you to try, because they know it takes so many attempts to try to find the right one. And then, it's easier to go up to a founder and say, I'm a scout from A16Z, than say I'm Amit, because they might care about the Amit brand, but they really care about the A16Z brand. Like, that brand is a legendary brand in Silicon Valley. And so, from that perspective, it should be easier to meet some of these founders. But long-term FC. No, FOMO was my investment. So FOMO, Aptronic, Figure, and there's one other one that I can't say, but I did this one a couple of weeks ago as well. That was all me and my capital. I didn't even know about these guys. I didn't even know there was a scout program before FOMO. But FOMO is what influenced me to think, like, because I think FOMO is a good deal, dude. When you talk about a good deal, it has all the things you would check mark off a good deal. Now, will it work? Who knows? But it's a good freaking deal, in my opinion. And there's a shot that, the $100 million company potentially one day turns into a $1 billion company, which is a 10x. And, if it can turn into $1 billion, I think they can go to 10 billion. But if I got access to that type of a deal, and the reason I got access is not just he's my friend, like, he's Paul has seen my brand evolve over the past couple of years, and he really would like someone who's in the finance space help him be able to navigate finance social media with a product that is intrinsically social within finance. And so the synergy made a lot of sense. The question was just, would I actually make the investment? And then after I heard the pitch, I'm like, well, it's a better deal than not. And so the fact that he even valued what I could bring to the table, and I got the opportunity to be on the table because of what he valued I could bring, that's where I was like, maybe this could happen a lot more often with other startups. But then you just need the ability to actually deploy the capital. Yeah, Katie Hahn was a former prosecutor, and she joined on the venture side as well. A16Z has a lot of these partners that have just, I mean, dude, the whole American dynamism stuff, like the whole VCs investing in defense tech companies to find the next Palantir and Anduril. I mean, Andreessen was one of the earliest guys into Anduril. That's been led by Andreessen Horowitz. Like, they've been on this whole idea of like, we need to defend the West and we need to find companies that are actively trying to do that. So that was also another idea. Will you mentor those you invest in via the VC company? It depends, right? If the founder is willing or needs some type of mentorship in whatever way I can mentor, if there is even a way, then I want to be helpful in whatever way I can. And I don't know how, whether that's, navigating social media, whether that's public speaking, there's a lot of different things I think I could help with, but it really just does depend on finding these deals and if these deals ultimately have any value. You guys saying Peter Thiel sold 50% of his BM&R? That does not surprise me. I mean, Peter Thiel sells aggressively all the time. This guy sold Meta at the IPO and a lot of it. And he sold it at 40 billion. Meta's at 2 trillion. So he sold 34 billion or 34. He sold $1 billion worth of Palantir stock at $34. So he's not afraid to take profits. Yeah, Peter Thiel is selling half of his BM&R position. NVIDIA, I really don't think anything on the 13F changed. It looks like they're still holding all the same companies. I'm trying to get the exact, do I have it right here? No, this website doesn't have, I'm trying to find the exact holdings, but it looks like it's the same. Oh, Tom, that's awesome. Hey, Mr. Erlanger. Admit it's Paul's dad. Congrats on your amazing media channel. I believe I was a judge for one of your debate rounds. Is that correct? Yeah, Tom, you were one of the judges. Dude, that's great. Well, congrats to you and congrats to your son. Tom is the father of Paul, who was just on the show just now. And yeah, your son built an incredible startup. Happy to be an investor in it. And yes, you were the judge of one of my debate rounds back in, I think, 2016. That's great. That's so awesome. It's a small world. It's a super small world. You were actually one of the judges for another student that I coached in 2017, I remember, because we went to that same tournament the year after and I was a coach. And I'm pretty sure you were one of the judges now that I think about it. And I think you voted for my kid. So thank you. I think we got your ballot. But thank you, Tom, for being here. And congrats to Paul. Again, was super, super excited when he hit me up and happy to have been part of the journey for him. Okay, is that it? Is that all the 13Fs? I mean, the big news today, again, Google and Berkshire. Yes, Thiel got in at 450. Thiel got in early. So obviously Thiel taking some profits right here is not crazy. Warren Buffett, 18 million shares of Google. That was a big one. I think that was the big news of the day. Let me call Steve. I don't think Steve would have texted me by now if he heard this. I don't think Steve heard the news. I don't think Steve heard the news on this. Like, there's no way Steve wouldn't have texted me if he saw this. That's how you know he's busy.
Hello, Emmett.
Yo, what are you doing?
Oh, I just made myself some oatmeal and I'm about to eat it.
Do you even know what's happening in the, I'm live, by the way. Do you even know what's happening in the financial markets right now?
No, I have no clue what's happening in the financial markets right now.
Do you know who bought Google?
No.
Dude.
Would you like me to, let me see my react?
Okay, guess.
I don't, why would I know? How would I know? I haven't looked at anything.
Warren Buffett bought $5 billion of Google.
Stop it. Get the. Can I curse?
Go ahead, dude. It's worth it.
Get the fuck out of here.
Warren Buffett buys 18 million shares of Google.
Get the fuck out of here. You know it wasn't him.
It wasn't him, but it's better to say it was. It feels better to say.
Right, but you know it was somebody else on his team. It wasn't him.
Yeah, it was probably Greg Abel.
Yeah, it was definitely Abel. And by the way, did you see what I sent you? And did you listen to Chamath talking about Palantir?
I've been live for the. Let me pull it up. I've been live for the past hour, so let me pull up.
It's somewhere in there. He talks about it, and it's interesting.
Is he bullish or bearish?
Let's just say he ain't bearish.
Okay, I'll pull it up in a second.
Send me a link. I'll hop on if you want.
Okay.
Or are you ending soon?
No, I'll send you a link. We'll watch it together. I'll send you a link.
All right, later.
All right. I told you guys he would have texted me if he saw the news. You heard his reaction. He would have texted me immediately if he saw. The fact that he didn't hear about this freaking oatmeal was more important than freaking Buffett, dude. That is crazy. Berkshire is in. I haven't heard this Chamath Palantir thing, so we'll pull it up together. We'll watch it. That's wild, bro. That's wild. All right, so Berkshire's in Google. Could you imagine if Berkshire was in Palantir? That one would be crazy. That one would be crazy. But yeah, that's kind of wild. That's kind of wild. Sold Apple and got the Googs. You're reaching now? Well, who would have thought he would have bought Google? I mean, who knows? Maybe one day. Maybe Greg Abel. Dude, if Berkshire put their money behind the retail FinTwit trades, they would be up like 5x this year. Now, none of their investors would be able to sleep at night, but still, it would be fun. I did see the Tesla FSD added to the referral program. I saw that today. It's good. I mean, they need to get more people to get on FSD. So, just like you can share your link to save like $500 if someone buys a Tesla on your link, it makes sense for them to do that with FSD. Jeff, thank you for the 28 super chat. Congrats, man, on the scout thing. What do you think is your skill set that lets you find Hood and Palantir early? There's a lot of time I spent psychoanalyzing why I bought Hood and Palantir at 7. And so there's a lot of detail I can go into. I think the number one thing I'll say is that I really, really, really studied Carp Vlad. I think that's the biggest thing. Like, and again, there's a lot of nuance to it, but like I was thinking about this the other day. I think like after listening to a lot of Carp interviews, because I think the Wall Street Journal like interviewed me about that, and it was Wired magazine, and they were just asking like, you know, why'd you? As I think it was Carp. It really, in those early days, you have nothing other than Carp, because I didn't understand the technology, so it really just came down to like the philosophy of why they built it. And then for Vlad, it was kind of the same thing. Obviously, I used the product every day with Robinhood, so it made more sense, and the market cap and the cash and all that stuff. But like at its core, I saw Vlad as an immigrant founder who somehow built a exchange that 20 million people at the time used to buy stocks for free. Like who does that? That's what I'm saying. So, like, a lot of these investments come down to people. And so that's why from an angel perspective, I have a little bit of hope that if the Palantir and Hood investments were based not only on the numbers, the balance sheets, or the growth rates, but on the people that built them, aka the founders. That's part of my thesis on Grab, is Anthony Tan as a founder. As a VC, could I find a younger Carp or a younger Vlad in their early days and invest in them at the beginning? I don't know if I will. It's a totally different challenge, obviously, but maybe there's some level of synergies that could make it happen. But I guess that would be the kind of core reason. Yep, hours and hours and hours of research. With Robinhood, it was definitely also valuation. I mean, again, $8 billion in cash, $6 billion market cap. But I had to fight for that conviction, because and you know, shout out to Steve. I remember him telling me like it's not a good investment at $8, because he was like, look at their operating leverage, and he was right. Like the numbers didn't look that pretty. But I was just like, there's a reason like Vlad is able to like keep building and growing. It wasn't growing as fast as it's growing today, but like there was something, and obviously it was the right bet on Vlad. I mean, the product velocity of Robinhood is a bet on the product innovation cycle of Vlad as a founder, pushing it down the ecosystem. Same thing with Carp. A bet on Palantir is a bet on Carp's ability to actually craft a narrative to sell to the government, to international governments, to commercial enterprises around why they need an ontology to operationalize LLMs. Like betting on the leader absolutely does matter. So yeah, I think that was kind of the core reason. Okay, Steve's not on yet. Let me pull up this Palantir Chamath thing and see what he was talking about. Let's pull this up. Yeah, let's start watching it. He'll be on in a bit, but he already saw it already, so we can watch it here. Okay, let's see. Oh, there he is. All right, I'm gonna play the Chamath thing right now. We'll listen to it.
Never fear, Mitt. The milkman is here.
What do you say?
Never fear, the milkman is here.
Did you eat your lunch or your oatmeal yet, or no?
No, I just came up with a new way to make my oatmeal, and I put cherries, blueberries, and a banana in, and I simmer it for 10 minutes to liquefy them almost. So it is so freaking good. It doesn't even look like oatmeal. It looks like, I should just show you. Like, it looks amazing. It looks freaking amazing. Hold on. It looks, I'm so ready for this.
Show that again. Show that again. What?
I'm so ready for this.
Dude, that looks like chili.
It's not. It's freaking oatmeal. And it took me legit maybe 10 minutes to make it because I did on a simmer with a full banana, big cherries, and fresh cherries and fresh blueberries. So they popped inside and all the natural jam went all over the place and it came out this color. I'm so excited for this.
Okay, well, I'll let you choose.
Listen, this is what happens when you have crazy ideas. You just start making food really fun, you know?
Okay, let's listen to this Palantir. Chili oatmeal fruits. All right. Can't believe you did.
What? You can't believe what?
I just can't believe you put all that together. Really, but if you enjoy it, that's what matters.
It's so freaking delicious.
I guess the other shirt we should take a look at is the Palantir one, because Palantir is, man, it's way out there. Alex Karp has been doing some great interviews. He's a national treasure, incredibly entertaining. They obviously have a great business. They're on a $3.5 billion run rate, according to their last quarter. But the valuation is $480 billion. This puts them at 137 times their sales. It is extraordinary. It's way out there. Datadog and Snowflake, Microsoft, these are at 13 times their sales. And I guess Cloudflare is out there at 37 and CrowdStrike at 30. So this is truly an outlier, Friedberg. If you were to give Palantir the same price to sales ratio as some of those highly valued ones, probably be a $60, $70 billion company, $29 a share instead of 170. So what do you think of his Palantir shirt?
Dude, Chamath is eating while Steve is eating.
Great minds think alike, sir.
Did you just bring the food to be like Chamath, bro?
No, I had already made it and I sat down to eat it when you called me.
I think you just wanted to be like Chamath.
No, you heard the TV in the background. I was sitting with my wife and one of her friends.
That's true. I did hear that. Yeah.
One of our friends. So
Friedberg.
And based on the statement you just made, you're saying that a company is worth their historical sales numbers. And I don't think that that's how shareholders often do or perhaps should think about what they're buying, which is an ownership interest in the future of the enterprise that they're buying a piece of. When you invest in a startup, you're not saying, hey, that startup is worth what the employees did last year before they even started the company. You're making a bet on the future potential of the business and what you think the cash generation over time will be. Your time horizon may be different than mine, and that's how a market finds a price. As a result, I think there's probably a market trying to find a price for Palantir where folks have a great deal of difference in opinion over what the future potential of the business is. And as a result, what the earnings generation will be at different timescales in the future. And that's how they're getting to the current market price. Who am I to judge? I am the person who would make my own decision of my own time scale and my own estimation of the future of that business if I were putting my own capital into the business. I've not studied the business well. I don't have a strong point of view or opinion on the value of the business relative to its future earnings potential. That's how I would look at it. I would make an investment for the long term if I were to buy the shares, not look at the last year's numbers and say that there's a valuation arbitrage opportunity and that's what I'm buying. So, to each their own. Over time, the market corrects itself. As they say, it's a voting matter today and it's a weighing matter in the future. That's Warren Buffett's famous quote, that the actual earnings generation in the future will determine whether someone paid a good price or a bad price, depending on the point at which they bought in the past. Meaning, at 400 billion market cap, you could be getting a steal, or you could be significantly overpaying. That's going to be based on your assessment, your judgment as an investor.
And I think
No idea.
people are looking at like 30 to 45% year-over-year growth, Chamath, and saying, yeah, it's got a lot of, to fill in that valuation would just take a lot of growth. Maybe the growth accelerates. We saw that with NVIDIA, right? They started to have unprecedented growth. Any thoughts on Palantir short while we move on to our next subject, Chamath?
Well, I think the Palantir short is stupid. And I think that those people will lose money. The thing with all of these other companies, put your chart up there. The thing that the people that are shorting this company don't understand is that all of these other businesses that you put up there is a viable competitor of some kind that you can switch to. And so what I would say is the opposite of what they're saying, which is you have a low multiple to sales when the churn risk is higher. So look at the one with the lowest multiple to sales, MongoDB. There's 90 versions of what MongoDB does. I'm not going to say whether MongoDB is good or bad. It's actually a good company. It's an extremely well-run business. But it's not unique. It's just extremely well-run. Snowflake is not unique, but it is well-run. Palantir is both unique and well-run. And there's no clear alternative. So there's no place to churn to. And so I think the reason why it has a premium valuation is because the duration and the durability of these cash flows are much longer than what you typically see in any of these other companies. And if people took 1/1000th of a second to actually use their brain, they'd come to that conclusion.
Lack of competitors would be the reason you think it's more defensible. Yeah.
By the way, I'm neither long nor short. I was long in the private markets. I was an investor in the Series B of Palantir. I'm not long anymore. I wish I was, but I'm not. So it's not like I have a vested interest in this being right, but it's just so obvious that what they do is completely unique and completely differentiated. There is no alternative in the market for it. That's why they trade at such a huge premium to sales. And if you look at any market for any product that is unique and is effectively where they are the only competitor for what they offer, you will see an equivalent market dynamic like this.
And there is no competitor to the greatest holiday party ever.
Boom. That's got to make you excited going into the weekend. Boom.
What more can you say? Karp says the same thing. He just says it in a more philosophical way that doesn't seem to resonate with everybody, but maybe Chamath saying it that way resonates with investors more. There's no competitors.
You ready for what else you can say? Valuation's about to get much stupider.
What do you mean?
Higher.
What, you think it's going higher?
Valuation's about to get stupider.
I mean, look, it was at 220 a couple weeks ago. So it's not
why
like,
can't we go to 250, 300?
I mean, we could. I don't know if that's going to happen soon, but I just think being able to hold the premium that it's trading at today. Look, the thing about Palantir right now is that there is a debate around investors on does this stock deserve its valuation? And that debate kind of died out a couple months ago, but the Burry thing really brought it back to life, even though it's like a $9 million put position. So now that debate has got a lot more attention. And with Karp and his sword and everything, you got all these people saying, oh, this guy doesn't know what he's doing. So now everyone's questioning the valuation again. And so I think Palantir just holding their premium is a big FU to all those people. Because if they even hold a $450 billion market cap, that's enough at the moment for Palantir.
Yeah, I think the big thing here is it's not, and you can say what you want about Chamath. You can think that his SPACs were a scam. You can not like his investment style. But what the hell is that? Anyway.
What? What did you see?
That super chat that just came out. Like, really?
I guess you have a lot of that oatmeal. Okay. You have your own channel. You should know by now. People send weird super chats.
Oh,
By the
man.
way, can we throw some W's in the chat? Steve just hit 10,000 subs.
Yay, thank you. Couldn't have done it without Amit.
Well, you
But-
built it. You built it.
The bottom line is Chamath has his ear to the ground. He knows more than most people about companies that are private. He knows more than most people about tech companies. He helped build in the early stages Facebook. He's been involved in so many tech companies over the past 2 decades that when he says Palantir does not have any competitors, you have to take that very seriously.
Yeah, I mean, look, I believed Karp a couple years ago when he said we don't have competitors. Hey, it's nice to see Chamath say that, but like when he says there's a trillion versions of MongoDB, I'm not a big tech guy, and even I know that. And I don't even engage with those softwares every day in some corporate setting, but even I know from the basic research I've done, there's a lot of different versions of these different companies, whereas Palantir really is a one-of-one. So, are you buying?
No.
You said it's going higher. Why do you keep doing this? You say it's going higher. Just buy the damn stock. Why are you so
You know why I did it? Because the last time I joked around like this and I said, we could get to 150 and it went past and everybody thought like, no, there's no way. I'm just trying to help everybody out.
No, I look, I still think you are deeply afraid of the valuation.
I am
really
shook. The valuation makes zero sense to me.
But then how do you get so excited about what Chamath says, but then you're still so scared about the valuation?
Because I'm excited for everybody else. I want the community to make money. I'm excited for everybody else. And I think that it's a big vote of confidence. Look, Chamath is a polarizing figure. You got people who love him. You got people who hate him. And you have people that are indifferent. But you can't say that he doesn't understand technology. And you don't have a lot of people that don't have a ulterior motive that are that much with their ear to the ground coming out and saying that Palantir does not have any competitors. So I think that it's very bullish for an aspect of the valuation.
I agree with that. I think that is a very fair point to make. And you're right. He doesn't have a stake in them. So, I mean, it's not like he's saying it to pump his bags.
Exactly. And it makes me rethink what I had said last week about layering Power BI on top of Fabric would be a competitor to Palantir. And now I'm not so sure anymore.
Okay, so can we talk about your boy buying Google?
Sure. It definitely wasn't him. Let's be clear. I don't even think he knows what Google is.
No, he's still the head of the firm, technically. He didn't retire.
Right.
Yet.
Sure.
He's retiring December 31st. He's still the head of this thing. So
Yeah.
you think they're not going to tell the boss they just spent $5 billion on something?
Oh, I didn't say they didn't tell him, but I don't think he knows what it is.
Okay, don't be disrespectful. Okay, don't be disrespectful. He knows what Google is.
You can't even say that with a straight face.
But no, Buffett knows what Google freaking. I just don't think he would ever say, "Pull the trigger, $5 billion, let's go." But I do think it's pretty bullish. So here's the question: do you think that there is, as Tannor he was on before you? Do you think there's a new philosophy that Berkshire is going to have?
Yes,
with technology.
Absolutely.
Do you think that's necessary for them to survive in the next decade?
Survive? No. Outperform? Yes.
I agree.
You have to remember they pull up Berkshire's site of their companies that they own. They own like 60 independent companies. And a lot of people that haven't looked at this, Fruit of the Loom, Duracell, Hers Something Jewelers, freaking Business Wire. Go down the list. I mean, Benjamin Moore. They own freaking Benjamin Moore. You know what I mean? Obviously, the insurance companies, but think about how many freaking Duracell batteries are sold. You know, think of this is a holding company that you'll never rebuild. They own freaking NetJets. I mean, come
Dude,
on.
I didn't know they own NetJets. That's crazy.
Dude, See's Candy, by the way, everybody knows that I'm a food crazy person. Do yourself a favor. See's Candy is unfreaking believable. Okay.
You know, I've never had it. I know about it, but I never had it.
Anybody who has a sweet tooth, See's Candy is freaking legit as hell. So legit.
So, what do you think of them selling 15% of Apple to buy $5 billion of Google?
I mean, think about how much they're up on Apple buy. I don't hate that move because if you had to pick one of the two for the next 5 or 10 years, I would say they're both great companies, but I think there's more upside potential with Alphabet than Apple.
I think so. And I think at some point the firm was like, wait a second. There's no way we can go into the next decade without having a sizable stake in a Mag 7. Well, here's the other question. Is Buffett or just Berkshire buying Google shut everybody up about AI bubble?
No.
But you can't buy a company doing $100 billion in CapEx with Berkshire's capital and then still say it's a bubble.
Why?
Well, I mean, people will still say it's a bubble, but I feel like it really like Buffett wouldn't or Berkshire wouldn't put money into something they thought they were spending money on something stupid. Like
no, they
would
looked
not
at the freaking cash flow statement like any normal person and realize, this is not a bubble. I mean, sorry, but look at their balance sheet, look at their cash flow statement. That's all you need to look at. This is not an AI bubble. And I said I was going to do this and I got preoccupied the other week. I'm going fucking scorched earth tonight on Twitter. Like real scorched earth. I'm going to do like a 12 to 1500 word freaking thing. Once again, about why all these people are wrong and put the dagger and twist it. Because I'm sick of hearing it about an AI bubble. There's no fucking AI bubble.
Google 284 after hours. Yeah, and I also think Berkshire is probably content with the CapEx they're spending, knowing that the CapEx inevitably is going to end and it'll go back to free cash flow, as you said. But if it doesn't,
just bring up a cash flow statement. Go to Seeking Alpha, bring up the cash flow statement. Their cash from operations has been growing year over year. And they're generating, I don't want to give a bad number, but it's around 140 billion in cash from operations, something like that. It's them and Microsoft that generate the most in the market.
Yeah, and the other thing that's really interesting about it is that they are the ones that have the best bets outside
100%.
of just search. When it comes
100%.
to Waymo, when it comes to
so do me a favor, go to the cash flow statement, not the income statement. Because that's the most important thing. So when you look at cash from operations,
151 billion, dude. Cash from operations.
Do it on a TTM basis.
Yeah, 151 billion.
Okay. You have it left to right. I'm not used to looking at it like that. I'm sorry. 151 billion, and it's gone up from 125 to 101. They're adding more than 20 billion in cash from operations year over year. And then when you look at the CapEx, scroll down just a little. There you go. I mean, do you really care about spending 77 billion in CapEx when you're putting up 151 billion in cash from operations, and you know that all those investments that you're going to make are going to continue to make your cash from operations expand? No, you don't freaking care because you have a huge backlog for cloud demand.
Yeah, 100%.
And here's the other thing. They are in a position nobody can freaking mess with them. Nobody can compete with Amazon, Alphabet, or Microsoft. Nobody. And it's just going to get more drastic, that statement, and these companies are just going to get bigger. So for people to say that this is a freaking bubble, well, they're spending half of their cash from operations on CapEx. Who's to say that they're wrong? Like think about it. They create a company that's generating the most cash from operations in the world. Who's to say that they're wrong on what they spend their CapEx or how much they allocate to CapEx?
Berkshire's not
me.
saying they're wrong. Not you, not me, not Greg Abel.
Exactly.
Look, I don't know how the end of the year turns out, but they did not buy $5 billion to sell it in December. I mean, this looks like it's a decade-long investment.
Probably is, but it's an investment where if AI becomes much bigger than what it is, Alphabet's going to be one of the companies that truly benefits. And it's not just from cloud services. Think about how much they'll benefit from YouTube. I mean, they may be able to do a package for creators to embed AI to do stuff, or advertising, and allow an advertising platform for their entire suite of products across search and Gemini and YouTube. So they're going to truly benefit. So I am not worried about this at all.
I agree. A lot of you guys are saying that Meet Kevin has gone bearish. That's fine.
Good for him.
Good for him.
Ask me if I care.
There's a lot of comments about Meet Kevin's bearish. Meet Kevin, like, he's been bearish for like 5 years or something. I don't know if there's much to analyze there. I mean, but speaking of bearishness, the probability for December rate cut now is less than 50%. How are you?
Yeah, because the Fed is freaking ridiculous.
You know,
I said that was going to happen.
You rant about the Fed a lot. I don't rant about the Fed as much as you, but over the past 24 hours, seeing these guys all, for some reason, coordinate this now new stance around inflation versus the labor market when I thought it was the opposite for the past 3 weeks, it makes you want to just say the Fed is fucking regarded. Like, you really want to say that this institution is ridiculous.
I came on here last week and said that this was going to happen. I called it. I hate it. And I am one of the few people, and I'm fine. People can roast me for this. I don't care. Okay. Unless there is a situation that is dire straits, keep the rate at 2.5%. The free market will figure it out. And if inflation goes up at some point, there will be more demand hitting the market because that means that there is a supply issue. I care way more about American jobs and making sure that we have an environment for entrepreneurs and businesses to thrive. And that is very hard in a restrictive Fed environment at 5.5% or even 4.5%. And I freaking don't care. There's no difference. When people start talking about, really think about this. Oh man, the difference between 3.75 and 3.25. Really? So you're going to tell me there's a big difference between spending $103.25 versus $103.75? You're really going to try to sell that to me?
Bro, like, one of them said we might have to hike next year today. That's what really pissed me off.
They're so dumb. They're so dumb.
How do you not see Verizon 20,000 layoff, Intel 5,000 layoff, American Airlines 900 layoff, Amazon 30,000 layoff? I'll be like, oh, we should hike rates right now. This is not just headlines. These are real people losing their job.
Right. Right. And where do they think the new jobs are going to come from? Most people that want to start a business do not have the personal capital to go do so. They either have to do a seed funding round, borrow from friends or family, or try to go get a small business loan. Okay. You have to make the profitability model in a range where these businesses are actually incentivized to get off the ground. And it's more important now than ever before for that to happen, because we're about to see a huge productivity boom. And that word gets thrown around a lot. And it is great for the big companies. It is horrible for workers. Horrible. These layoffs are going to keep coming. And in the age of AI and robotics, we are going to see even more. You didn't stay last night, but I think you may have watched part of the video in the chat or not. Barry Sternlich said everything I was basically saying about his companies having to lay people off, et cetera, et cetera. Did you listen to it?
Yeah, a couple parts of it. The part that mattered, I heard, and I understand why you wanted to share the video.
I mean, people don't freaking understand what is actually happening, and they're not listening to the people that are actually making the decisions. Like, he is actually making these decisions. He is actually utilizing an AI call center for his hotels, which he owns a fuck ton of, instead of people now. And he is saying that this just happened with Delta and this just happened with other companies now. More and more Americans are going to be without jobs or opportunities because more is going to be taken over by AI and robotics. And I'm sorry, nobody is going to convince me that we're not going to have robotics doing plumbing in 15 years. 15 years is a lifetime with technology. Think about where technology was 15 years ago in 2010. You just had, the second version of the iPhone? You had no cloud computing, no SaaS. Think about it. That's a lifetime. And it's going to speed up even quicker because of all the advancements in the foundation you have today versus then.
Do you think there's a political motivation for why they're thinking of no cut?
I don't really want to go down that road. I just want to say that they are going to use the node data as a scapegoat for some reason. And I am not happy about it because I'm a firm believer that you need rates at 2.5%, especially in an environment. Really think about this. You're in an environment where people took mortgages out and refied at levels of 2.8 to 3.3%. The housing market is locked up. You also have businesses taking out loans when the Fed funds rate was less than 1%. So they're getting great rates on their loans of what, 4%, 4.5%, maybe 5% if they weren't creditworthiness. They have to go refi, and now they have to pay 7, 8, 9%. That destroys their profitability model, and that means that they got to get those margins back somewhere, and that's probably going to come from RIFs, reduction in force. A higher rate environment is not good for the business landscape, which everybody should care about because that is where jobs come from. And I don't care what side of the aisle you're on, we should all want a booming economy with jobs for everybody, and not just jobs, but good jobs.
I agree. And I really don't understand how 3 weeks ago they cared more about the labor market and now they care about inflation. And inflation is probably up. I mean, the fact that Trump is talking about getting rid of some of these tariffs on food is him admitting it's up, but it's not like 2022. Like 25 bips is going to kill us? Really?
Dude, look at that comment right there. Dude, I'm in mortgage lending. We've been in a full-blown recession since late 2022, nearly 4 damn years. That's because anybody who took out a mortgage, if you just bring up a mortgage calculator and you put just a arbitrary price, you can put 300, 500, 700, whatever you want to put in. Do it at a 3% and then do it at 6.5%, and look at the dramatic difference in the monthly payment. And that's applicable to any type of loan. So,
and so this whole 50-year mortgage and stuff, do you think that's just like a Band-Aid on the?
I don't want 50-year mortgage is not a good idea at all.
Oh, you totally don't
idea. No, I don't agree with it. 50 years? Think about this. Okay, so what are we trying to do? Get people back to the average age used to be 28 years old to buy your first home, okay? What's 28 plus 50?
78.
So you're telling me you're not going to be done paying off your home until 78?
Yeah, it's not the most.
And then then we don't have to go down the numbers, but think about the amount of interest you're going to pay on a 30-year versus a 50-year. It's going to be a lot more. It's great for the banks and the financial institutions. It's horrible for the American public.
Dude, they should do a 1,000-year mortgage so that you die and you never have to pay it off.
I'm so against the 50-year. You wouldn't need a 50-year mortgage if we didn't play around with these rates. Like, is anybody seriously going to sit there and try to say that if the Fed didn't raise rates past 2.5 or 3%, that this wouldn't have worked itself out? You're telling me that if there was a way for companies to make money, they're not going to try to make money? Like, that's the whole idea of supply and demand. If there's a demand for a product, companies are going to step in and fill the demand.
So, okay, let's say we don't get the rate cut, which it looks like we're not. I mean, based on
I don't think we hit 7,000 this year.
Oh wow! So the rate cut is your
I
linchpin
don't
to
think
that.
we do. I mean, I think it's going to send fear in the market, and I think that it's going to cause people to sell off and wait and take a beat and see what happens. Now, I did say that Trump is going to do something with tariffs based on if the Fed comes out and says this, and it looks like they did today. So,
but what he's doing with tariffs right now is so confusing to me. Like, it's like he's admitting that he was wrong for putting the tariffs on in the first place, which is a lot of ammo for the other
it's
side.
just for the headline. It's only for the headline.
Only for the headline, right? It's not like real. Like it's
only for the headline.
And almost coffee and banana. That's like that's not
only for the headline.
Here's the other wild card. What if we get a horrible labor markets report for November?
I think we're going to.
Well, then that might increase the probability for the rate cut,
Look,
right?
What have I drilled into your head for the past 2 or 3 years? Unemployment is the biggest factor of a recession, correct?
Yeah.
If you go back 50 or 75 years, every time we've hit a recession, unemployment has increased by 1% or more. They do. I got bananas in my oatmeal. Coffee goes great with oatmeal. But we do not want to see unemployment continue to increase, because when unemployment increases, spending goes down. People that don't have jobs are in a lot of pain. They're not spending. And then people who think they're on the bubble of the next riff save every penny that they have, because they don't know if they're going to have a check coming in 6 months from now. You do not want the labor market cracking.
Yeah, and like if the labor market cracks and then the Fed cuts, it's like okay, but if it cracks to the extent where it doesn't matter if they cut, then we're all like, all right, we're done basically. It's not.
But that's my point. We should never get to the point where the labor market cracks. We should be proactive instead of reactive with rates, and make sure that we have an environment that makes sure that the labor market doesn't freaking crack. Because look, if you have a good job, I'm sorry, paying $102 or $104 doesn't fucking matter. Eventually, it's going to right size.
Yeah. Yeah, and it's like we're not being super aggressive by saying this is not, 2022 inflation is 9%. We're talking about we need to cut rates. This is 2.5% to 3%, and this is intense labor market fears backed by real headlines. This is not a COVID rebound where we're adding 500,000 jobs a month, and we're asking for 25 bips. In a world in which subprime auto and credit card delinquencies are through the roof. Like, I have no idea in what world the Fed looks at that and says, we're going to wait. Like, how could they possibly? This is the first time I felt passionate enough to feel angry that these guys aren't getting it.
Yeah, I mean, I'm annoyed about it. And you got to make it where these businesses are in a position where they can hire people. You got to make it where they can expand. And you also have to make look, a lot of student loans are predatory. I got news for everybody. A lot of credit cards are predatory.
Oh,
and we need to do a much better job at financial education. And this is where I get into a lot of trouble with people, and people think I go crazy about this, but I don't care. Financial literacy should be the number one thing that we teach in high school. We should not allow anybody to graduate high school without core competency of financial literature, because they're going to use it for the rest of their life. There is nothing else you're going to learn in high school that you will use to the day you die. Nothing except financial literacy.
So you're saying we don't need Espanol?
That's not what I'm saying. I'm saying that
look,
if you're becoming a physicist, you're not using that until the day you die. You're using it until your career is over. Financial literacy used for your entire life. And why are we allowing kids to come out of high school, or even 18-year-olds that are still in high school, to sign up for a credit card with predatory rates? Why are we allowing them to take student debt out for a degree where they're not going to be able to get a freaking job, where they're going to be able to pay back that money? Like, we need to do such a better job. We need to teach people about taxes, about saving for retirement, compounding interest, that what you do in your 20s actually matters a ton. Way more than what you do in your 40s, because just the time value of money. Like, why we're not teaching this, and why we are not hyper focused on making sure that the youth is set up in a better position than we were, is freaking ridiculous. I get super passionate about this, and I'm freaking annoyed at it, because I see all these young people that truly feel like the system doesn't work for them. but I feel like they haven't been taught how to set themselves up and utilize the system.
Dude, and we were talking about it yesterday, but I was watching actually a clip from a news segment on this today. We were onto something last night. This idea that there will be a politician who stands up and says, I will make sure AI cannot take your job away, and that politician will garner an audience.
100%.
It is gonna, I mean, I was hearing a couple of people talk about it today, and they were saying, like, of course that's gonna happen. Oh, what's the guy's name? Matt Walsh. This guy's on the Daily Wire, Ben Shapiro's thing, whether you like him or not. I mean, he had a long tweet that had 5 million views today, basically saying there needs to be a politician to stand up and stop the spread of AI.
You can't do it.
You can't, but
can't do it.
That was
because
his point.
If you try to put safeguards in, okay, you cripple us, and now every other country now has technological advances past us. And when you think about that on the war front, can't do it, can't have it. We have to be the superpower of it.
It's like Uber and the limos. You're not going to stop Uber or Airbnb in the hotels. You're not going to stop technology from producing, but there will definitely be someone who garners an audience to promise that they're going to stop doing that. Especially if everyone who's losing their job is, looking for someone who can stop this. That tweet got 4 million views, and you had a lot of comments saying, "Yeah, like why are we letting ChatGPT?" Like there is a argument. And it's an argument that's out there that people are saying, why don't we just stop people from building the robots? Let's just keep this job, and we never have to, let's make a law to never let technology get to the point where it replaces workers. And that's a legitimate discussion that people.
I think what's crazier is that people actually think that in 15 years, we are not going to have a society where there are the same amount of jobs as now. I mean, maybe there's going to be other jobs that are created, but if AI and robotics is going to take a lot of these jobs, why would we think that we're going to be able to create other jobs from it? Like, really think about that for a minute. I'm going to go down the list, and I'm not going to answer. I'm going to ask you these questions. Do you think food service workers will be here in 15 years from now?
No.
Okay. Do you think waiters and waitresses will be here in 15 years from now?
Yes. I think fine dining and that. Yes, I think wait, I don't think that's going to be limited.
Think about Optimus and where it is now, where it will be in 15 years.
That's a good point. That's a good point.
You're telling me 15 generations later, we're not going to have robots doing the waiting?
Oh, that's a good point.
Okay.
Good point.
Dishwashing at a restaurant. Robotics?
Definitely. Yes. Yeah.
Okay. Call centers, picking up the phone. AI agents?
100%.
Okay. Uber drivers.
That's
full self-driving, right?
Yep.
Trucking industry.
I've always think trucking is gonna be harder because it's on the highways but eventually the AI will be good enough to.
15 years. I'm not talking about tomorrow.
I think that one might be like 25 years, but maybe.
Okay. Stocking shelves at a grocery store.
Yeah, that's gone.
Stocking warehouses.
That's gone.
Okay. Pulling stock out of warehouses and shipping.
No, you don't. I don't think you're gonna need people for that.
So think about how many industries that impacts, just those very several things that we rattled off. And then if we really want to go down the road, what about accountants? In 15 years, do you think you're just going to be able to scan all your documents and then have them done?
I was talking to ChatGPT today about some tax stuff. I haven't had a conversation. It was actually Grok. I haven't had a conversation with Grok like this in a couple months. It was the first time in a few months I was like, oh, I'm happy I pay for this every month. Like it was an intense, and I was asking it to think, and I was like, dude, that saves me a lot of back and forth with my CPA.
I'm going to give you another one. What about elderly care? Okay, now think about this. A lot of insurance claims come in from patient handling because people lift other people wrong, they strain a muscle, they pull something, et cetera, et cetera. Also, we are going to have more elderly people than before in 10 to 15 years from now. So robotics is going to be very big in elderly care. And then we already have the Da Vinci machine for surgery. You're telling me we're not going to have robots doing surgery in 15 years from now?
Have you heard this headline? Sam Altman and husband reportedly working to genetically engineer babies from having hereditary disease.
Yeah, I'm not shocked about that.
It goes to your point. Like, of course we're going to replace people at a warehouse if they're
Right.
trying to genetically engineer
Right.
human beings. Like, and the Fed thinks that inflation's the issue?
Inflation, but that's my whole point. Inflation's not the issue at all. You know, you think about all these jobs, and then I love when people say, well, you can just go work blue collar jobs. You're telling me that you're not going to have a robotic plumber? Like, really? In 15 years, you're telling me that those Optimus bots are not going to be able to freaking do plumbing? It's like, stop it. That's just being narrow minded.
100%. 100%, dude. And also, it's just not easy to tell people to go get a new job and restart their life at that. Like, you can't, like.
Okay, look at technology. Look what happened last year with coders. Look what's happening this year with coders. You're telling me that we're going to need coders in 5 years from now? You're going to need managers, not coders.
Everyone's saying the robots can't replace the plumbing.
Okay. Okay.
Your broader point is that they're going to replace a lot.
Has anybody even seen a house be 3D printed yet? Because those videos are actually real.
Yeah.
Okay, you're telling me we're not going to have robots doing plumbing? Like, come on.
Well, look, if the humanoid robot gets to the point where it can do the dishes, do the laundry, it probably can do a lot of other things. So,
right.
I mean, we're talking about these are robots that are going to be trained on NVIDIA's what? 2032 generation chip. We're not talking about Blackwell in 2026. I mean, this is going to be.
I'm talking 2040. I'm not talking next year. 2040. We have a lot of things that we have to worry about. We have to take seriously because there's going to be a lot less jobs out there. And everybody who thinks that all these jobs are secure, all I'm going to say is come back to this video in 15 years and let's see who's right. Because if you're not willing to admit that there is actually a possibility of this, you're crazy.
So look, if that's the case, the Fed needs to cut rates because all of that is going to be so deflationary. It's not going to be the upside risk to inflation that they're worried about because of tariffs.
No.
But I don't know, dude. The fact that we went below 50 today makes me so okay. So let's say we don't get the cut. Where do you think the market if you had to put a target on the S&P?
I don't know. If we don't get a cut, I'm worried that we see a good retracement of 5 to 10%.
Oh, so that's like 640 S&P basically.
Yeah, because I think so many people are expecting it. I think it's not just that 25 bips is that important. I think it's what it signals. And I think that the ramifications in an environment where companies are laying people off, it's truly significant to freaking get this rate cut.
This is the first Russian AI robot. No, I agree.
I mean, that doesn't look like what Optimus does.
Yeah.
Like, that looks pretty bad. But you look at Optimus looks pretty freaking good.
Oh, but that's also the worst it's ever going to be. That's the
right. And I think that's what people don't understand. This is the worst it will ever be.
I don't like when people laugh at the robot videos and they say, "Oh, it can barely do the dishes." I'm like, the fact that it's even trying,
exactly,
and people have the nerve to be like, "Well, it can't do anything." It's like, dude, this is like, yeah, the first version of Uber sucked.
Yes, first version of everything sucks in retrospect.
And also, what, we're going to go against Elon? This is not some random kid who has this. This is Elon freaking Musk saying it'll be the biggest product in the world.
Yeah, like we're going to have landscaping companies. We're not. You're going to have pool cleaning companies. We're not. It's all going to be done by robotics at some point. And think about this. It's incentivized in business for this because it's going to make business owners' margins increase. Everybody is driven by capital as an incentive. And if you can generate more capital for yourself, you're going to want to find out ways to expand margin. And guess what? You have robots. There's no more workman's comp claims. There's no days off. They're not calling out sick. Anybody who deals with employees knows what I'm talking about. So we should be very eyes on the ball with this and keep an eye on how this is going, because a lot of people are going to freaking move to this area.
What do you say to Muhammad, who says you're freaking me out?
Everybody should be freaked out. And I don't know if freaked out is the right words, but aware of what is happening and look at the trends and just think about what's replaceable in the short term and what has the potential of being replaced. You're telling me that the dexterity in the hands of Optimus, when it gets better, is not going to be able to do plumbing. I find that very hard to believe. You're telling me it's not going to be able to cut a piece of wood? You're telling me it's not going to be able to use a hammer? Think about it. It also has an infinite amount of learning capability from every other robot that is doing these things. So to say that these are things that can never happen, I don't believe in never can happen. Something can always happen. A meteor could come and crash into Earth tomorrow. So, and I don't even have a ton of capital going into this. And with Elon Musk driving this, it's his mission to make this happen also. Keep that in mind.
I don't even think it's about freaking out. It's about, as an investor, you always have to see a competitor to your investment. And in this case, you know, the best investment is yourself. Everyone, no matter what industry you're in, has to be aware of the competitor, whether it's an agent, a chatbot, or a physical robot that can compete with you in 10 years. Which is why it's scary, right? Because it's almost like we have to, like, unless you're super rich, you have to compete for your livelihood with this thing that the super rich are creating. And one of the ways to hedge against that is for all of us to invest in the companies that are making this. So maybe we can have a chance of participating in the upside, but it's survival of the fittest in the context of these robots. And I mean, I think the perfect example about this is the taxi driver. If you look up documentaries about taxi drivers in New York City in particular that have not been able to continue their career because Uber commoditized it, it's a real thing that could happen.
That medallion used to be people's retirement plan, selling that medallion for 250, 300 grand.
Yes. And they had infinite demand because it's New York City. It's the capital of the world. Everyone needs to transport. Now, Uber, Lyft, Waymo coming in. Like,
look, I'm not trying to freak people out, but I'm being a realist right now. I mean, I always try to be a realist, but these are things that can absolutely happen. Will they? Who knows? I don't have a crystal ball, but to think that they can't happen is a little naive.
Yeah, I mean, it's not something that, I mean, just look at Booz Allen Hamilton's contracts from the government and how much they've been cut. Guess what? All those consultants, a lot of them are getting laid off because there's not enough work because the government doesn't need them stuff. And Booz Allen is like, hey, we can use a lot of these LLMs to do what these consultants were like. This stuff is affecting everything. And it's not something to ignore. But so then the question is, okay, so if the Fed's not going to cut and we have more layoffs, you're saying 10% correction, 5 to 10% end of this year. Then let's paint the bearish case. Fed doesn't cut, 5% correction. We have layoffs and then a shutdown again on January 30th.
How about this? Who cares if there's a shutdown or not? I mean, obviously, yes, we want people to get paid. I don't think there's going to be a shutdown. The bigger thing is we go into recession and unemployment continues to go up. I'm more worried about that because you can set the stage for a recession in Q2, Q3, because we could be in one right now and not realize it.
I mean, literally the White House said Q4's GDP could be cut by 2% because of the shutdown.
We could be in a recession or the start of a recession right now. The stock market is not an indicator of the economy. I don't care what anybody says.
Yeah, and I mean, did you look at the markets today, or were you kind of busy?
No, I have no idea what happened.
Well, so we ended slightly green, but it was a bloodbath in the pre-markets.
Okay.
And within about 30 minutes, it reversed. But my goodness, in the pre-markets, if you woke up and checked your portfolio, it was horrible. And I think we kind of got a sympathy bounce, to be honest. There was no headline. I think the markets were just like, we can't go that much lower off no reason. But it doesn't really make me that confident for next week unless we get some clarity around the tariff and interest rate issue.
Look, we truly need rates to come down, and we need to have a bigger conversation and stop bickering and complaining about where we go with unemployment. We have to get unemployment lower.
Yeah. Yeah, this rate cut thing really changes stuff, dude. The 7,000 was price for a rate cut.
There was a part of that Barry Sternlich video in the beginning where he talked about operating hotels in New York City. I never realized how big the expense is. And when he said, you want to know why orange juice is $8 a glass? He's like, we don't even make money on that because of how expensive it is to operate a freaking hotel in the city.
Yeah.
That's another problem. And once again, that's something with freaking robots that will be solved. The owners of businesses, it just creates a more beneficial model with margins. And that's the scary part.
I agree. SoftBank's up 40% after hours. I'm not sure why. Did Buffett buy SoftBank too? No, I don't see the reason, guys. If anyone has a reason, let me know. But they are up 40% after hours. They sold their NVIDIA this week.
So do me a favor, put up Nathan's thing. Robots aren't always the most cost-effective solution. Yeah, today they're not always the most cost-effective solution, but how do we know that they won't be in 10 years from now? Think about this. You buy a robot for $22,000. What are your expenses on that robot? Electricity to charge it, and then if you need maintenance throughout the year, there's no workman's comp, there's no healthcare benefits. You look at actually owning and operating a business that has employees, healthcare plans are freaking expensive. Payroll taxes are freaking expensive. Insurance is expensive. All of these costs get lowered with less staff. I'm telling you, it is when you really look at the economics of running a business of over 100 people or 200 people, and then think about if a robot can do a human's job and what that does to the actual operating expenses of a business, I think you'll be shocked at what happens, especially on productivity when there's no more, 8 hours and go home. Robot can work 16, 20 hours a day, depending on what the charge is.
Can we have the robots replace the senators? They'd probably be able to negotiate on a deal.
Probably not. I mean, that's a job that's probably
no. I think the robots could figure out how to open the government quicker than.
Well, look, I think that at the end of the day, people are not going to vote for robots, but sure, we could technically vote.
I'd vote for a robot. I'd vote for a robot over a politician in a heartbeat. You're telling me a perfect LLM with thousands of years of data can't make a better decision than Nancy Pelosi?
So nobody will go to restaurants with robots. They'll be boycotting. They'll be too expensive for small and regular businesses. Oh, think about this. A robot at $22,000 for the upfront cost. How much is it going to be to charge it throughout the year? Think about what a salary is. Even if you pay somebody minimum wage and they work 40 hours a week, there is no way that you can sit here and say that it's not going to be cheaper to have a robot.
Yeah. Also, people won't support restaurants with robots. I mean, people go to McDonald's that don't have cashiers.
Got news for everybody. Robots may be better than human chefs at some point. Why would we think they wouldn't be?
Yeah. Your robot waitress will probably flirt with you better than a regular waitress.
I mean, we're already seeing in San Francisco Airport, San Francisco International, the coffee stand that has no humans, and it makes cappuccinos, it makes espresso, it makes coffee. We're already seeing it. And this is the worst it's ever going to be, the way Amit said.
Yeah, bro, it's a real threat. It might be 10 years away, but the point is eventually that will lead to deflation. Yeah. The Fed being so concerned about this is kind of
it's in the future. Look, what I'm talking about could be 20 years off. I'm not saying the next 2 years, 5 years. I've been saying 15 years. But we have to freaking think about that this is a possibility. And these are the problems that I want solved, because we have to figure out how we're going to support a society of humans. And half the stuff that we argue about or politicians argue about is ridiculous.
Okay, so what's your? I'm putting you on the spot, but what's your S&P target for the year?
We gotta wait till the next Fed meeting. I'll give you
No,
two.
but by then the year's over. There's no fun in making a prediction at that point. Like
I'm
you've been saying
sticking with
7,000 for a
7,000.
year.
Listen, I'm sticking with 7,000 unless we don't get a rate cut. If we don't get a rate cut, I think 6,400.
Dude, that's not a fun year. We did all this. We went through all this shit for 6,300.
Because I think it's more the message it sends.
We went through all these ups and downs and emotions for 6,300. You know, we were 6,000 in January. So it's like, for all this earnings growth for 300 points. I know we're up from 4,800, but still, like.
Yeah, I mean, this worries me. If we get bad jobs report, if we get unemployment that increases, and if we don't get a Fed cut, you are going to see headlines that we're going into recession, and that's going to kill sentiment. People are going to want to protect profits. You're going to get a huge sell-off at the end of the year. Yeah. So, yeah, it could go 6,300.
I agree. I 100% agree. The Fed completely switched this end of year rally. And I'll ask you, I don't know if you want to comment on it. I mean, I have a take on it, but Trump investigating Bill Clinton for Epstein? I'll give you my take if you don't want to give a take.
It's not that I don't want to give a take. I'm just sick of it.
Here's my take.
Why can't we just say this? Anybody who did anything wrong should be held accountable. Why can't we just say that? Whoever it is.
Well, here's my take. I think that the Epstein stuff is becoming an overhang on this administration. Trump has not taken questions in 5 days because he doesn't want to deal with this, even though he's been public twice. I think he flipped the script. I think he said, okay, guys, if you really want to release the files, then let's go in on all the people that are influential to the Democrats, Reid Hoffman, Bill Clinton, et cetera, and let's see your relationship to this guy. And I think he's sending a dog whistle to these guys to tell the guys who control everything to make sure this vote doesn't go through.
Look, I don't care who is involved. Whoever it is should be held accountable. If Trump did something wrong regarding this, he should be held accountable for what he did. If Bill Clinton did something wrong, he should be held accountable to what he did. If XYZ actor or actress did something wrong, they should be held accountable. I don't know why this is a freaking issue that people are fighting over. Like, it's a very simple thing. Hold people accountable for what they did, period. End of story, full stop. Doesn't matter who they are.
Well, they're fighting for it because Trump doesn't want the files to come out. That's the whole controversy. I feel like it's an overhang. I think the markets also are a bit worried of just like, what worst case scenario? What happens if like there is something big? Like, does Trump have to step down? Like you really start going down the rabbit hole. Like, how does this play out?
Well, I don't think that we should make speculations. We have no idea what any of these people did. So I'm not going to make any speculations. But I think that we have laws written. There are consequences to the laws. And if it is proven that people broke the laws, there are consequences.
I agree with you. It's just we've seen time and time again in history, people break laws, and the people who break the laws, if they have influential power, like a Reid Hoffman, like a Bill Clinton, they make sure they get away with it. And so I think Trump really flipped the script by saying, all right, let's investigate if you want to investigate today. I just think it's another thing the markets. I mean, that's the only thing he tweeted about. He had one other tweet about inflation, 5 tweets about this Epstein stuff. So he obviously is concerned about it to an extent. And I don't know how the market's thinking about that.
We'll see what happens.
Do you think NVIDIA can save us next week from the Fed talk, or no? Is that not enough?
I want to say yes. I just don't know at this point. It's one company.
I don't think they can. Like, they're going to have an amazing Morgan Stanley. All these guys said NVIDIA's going to
be an amazing quarter. It's going to be amazing guidance. But is it so amazing that we're going to overlook the job market? I don't think so.
Now, what if the first 2 weeks of November were the chop, and the next 2 weeks are NVIDIA earnings, and then enough data comes out to justify the rate cut. I feel like that's your bull case.
Yeah, then you get 7,000.
You got to have NVIDIA win, and then you got to have a labor market that says rate cut.
It could go either way. Like, this is one of those scenarios where it's not weighted, skewed toward one side. This is truly 50-50. This could really go either way, depending on what happens over the next 2 weeks. Neither would surprise me.
Percentage chance on this is Q4 2018 again.
I can't handicap it. I don't know.
I think there's a 20% chance. I wouldn't put it at 50-50, but I would say there is a shot it could play out like that. Granted, the Fed wasn't hiking, or the Fed was hiking in Q4 2018. We thought the Fed would be cutting in Q4 of 25, and now they're talking about potentially hiking, which is insanity, but that's where the similarity comes.
Yeah, and think about, play that out. Oh, we start hiking again?
Oh, good.
Two things. Here's the first thing. Does anybody even take it seriously? Because Powell's leaving in May. So what are you going to do? You're going to hike and then maybe hike again? Powell doesn't get reappointed, and then somebody else comes in and says, you morons, we need to cut. And then they freaking start influencing people, and then we go back into a cutting cycle. So why would we even freaking raise for 6 months? That's stupid. It's stupid.
Well, that's the other thing. Everyone knows we're going to get a dove by May. So I do think try to pull forward a decent chunk of that happening before it happens.
Like, we know come May, this is going to be a different Fed with a different tone. There's going to be a directive from the administration. The new Fed chair is going to be a super dove. And I don't see the point of starting to hike now. Also, the other side of this is you start hiking now, you're pretty much guaranteeing there's going to be more layoffs if you start hiking.
100%. That's why when it was the Fed's Logan, when he even mentioned a hike, I almost lost my shit. I was like, really?
Yeah, because I'm sorry, do these people, they're on the freaking Fed voting committee. They obviously understand economics. Higher rates equals restrictive equals harder to expand.
Yeah. I agree.
Put me on the Fed, please.
Dude, Steve for Fed chair tomorrow. Steve for Fed chair.
Rates 2.5% until further notice. Period.
Dude, I can't imagine you actually taking questions from reporters. Oh my God.
God. If I was the Fed chair, that press conference would be so fire.
There would be so many answers where you say, I don't care. Next.
Oh, yeah.
It would be great.
100%. I would not care if it was the Wall Street Journal or the New York Times.
All right. I think that's it. Tanner bought PayPal, by the way.
Yeah, I spoke to him on the phone at some point and this week, and he said he was going to do some research on it.
He also bought Nebius. He bought Nebius.
I'll talk to him tonight about that.
He bought Nebius and PayPal. Buffett bought Google. Oh, Altimeter. Brad Gerstner bought Google. Like, they all decided to come onto the Google train. And then what else happened? And then...
Oh, my God. You know what? The chat's right. You know how I run my freaking...
He brought Broadcom. Brought Broadcom as well. Brad Gerstner.
I'd go either way on Broadcom. You know what? It wouldn't... My Fed meeting, the press conference, would not be seats, just like a seat style, the way it is. We'd have tables, and at every seat would be a glass of milk and a couple of chocolate chip cookies. Get everybody relaxed.
Dude.
And then I'll just say, just eat your cookie next.
Can we do that at the New York City meetup? Can we get a glass of milk and cookies for every? You have to come though if we do this. We have to do.
I mean, it's going to be in the winter, so I guess the milk will stay cold. I mean, maybe I can work something out with Ronnie Brook and do something, you know?
Oh yes, get Ronnie Book milk, dude. People would love Ronnie Book milk.
We'll raffle off a thing of milk.
Yes, exactly. No, everyone should get a custom Ronnie Brooks milk yogurt before they leave. Siege, thank you for the super chat. Watch the movie Elysium if you want to see an interesting interpretation of what a future with advanced robotics could look like. William Fichtner plays John Carlyle and is the Elon Musk of that movie. It's fascinating look at future social inequalities. Have you seen this, Steve, or no?
No, I'll check it out. I have not seen it.
Okay, Siege, thank you for the super chat, man. I will put that on the list. Also, another one on the list. Have you seen, Steve, Lord of War?
Yeah, Nicolas Cage.
Yeah. Have you seen it? Okay, Triple V today told me to watch it.
I don't know if you'll like it. It's a good movie. I enjoyed it.
I love Nicolas Cage.
Did you see Gone in 60 Seconds? Then you do not love Nicolas Cage.
I don't know. Have you seen The Last Mimsy?
I don't even know what the hell that is.
Nicolas Cage was in that one.
You see Matchstick Men?
I don't know what that is.
Of course. Raising Arizona? Family Man? Face Off? Con Air?
What's the other big one that he's in that everyone knows about?
I just named all of them. Con Air, The Rock, Face Off.
Another one you're not naming, bro.
The Rock.
No, dude. It's freaking...
Leaving Las Vegas.
No, it's...
I mean, I just named all of his biggest movies.
Oh, there's another one that, like... Guys, there's another one that... I know...
Yeah, you guys are right. I did not name National Treasure, which is freaking awesome.
I guess I've never seen... The Last Mimsy is a movie with Nicolas Cage.
Go watch Gone in 60 Seconds, please.
I'll have to watch Lord of War first.
Gone in 60 Seconds is hands down his best movie.
Oh my gosh. What a week, bro.
What a week.
I'm tired, bro. Like, I'm mentally legit tired.
Oh, God. You know, I streamed till 1:30 last night, got up at 7 today.
Okay, but you also don't talk for 8 hours in a row.
Talking about? What do you think I do at work?
No, but it's different talking in your interpersonal meetings versus talking and analyzing the news. There's a different type of just...
I worked all day. I freaking wrote articles for Seeking Alpha when I got home, and then I freaking streamed.
Look, that's incredible. I'm just saying, mentally, this week has been exhausting after the ups and downs and swings. Because again, I'm in it all day. Like you're in it at the end of the night. Like,
you need to start meditating.
No, meditating doesn't work. At least
burn some incense, meditate. You'll be all right.
No, I have my own ways of like relaxing and just laying watching TV and stuff. But like the point is just like it's dude, when these headlines are coming at you back and forth and you're getting these violent swings, and like if you didn't look at your portfolio for a week, you probably didn't even notice anything because we're almost
didn't even notice.
But like if you're covering it every day, 8 hours a day, every little 0.2% move,
I get it.
It's just exhausting after a week like this.
You know what you need?
All this shit to be back at 672. Like it's amazing. It's the greatest show on earth.
You deserve a nice juicy steak.
You know I showed you the steak I got last week.
I know. I was very proud of you.
Good steak.
Very proud of him. All right.
All right. Thank you, everybody. Appreciate it. Steve, thank you for joining. Steve's YouTube. I'm putting in the chat.
We'll be live at 10 p.m. tonight. I'll put a link out soon.
Okay. And again, Steve, this is his YouTube. Congratulations on 10.3.
It's crazy.
10,000 is not easy, bro. I'm just like, that's a big number. And he's committed because he works a real 9 to 5 and still comes back and does the stream. So, all right. Thank you, everybody. See you guys.
Everyone.
I'll see you guys on Sunday for the future show. Bye, everybody.